This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, all here. Earnings season, but much more going on. Paul, where to begin? I guess we start with a global bond route, and as you said to Nathan, over we go to the foreign exchange market.
Yeah, good. I don't know. I'm just looking at the 10-year Treasury, Tom, because that's kind of where the mortgage market's tied to.
Right.
We're up to 4.21% on the 10-year. We've got the
7% mortgage. Is that where we're
exactly. We're back there, and the two-year Treasury, 4.04%. Didn't see that coming.
Damian Sassauer morning. We do not have Mr. Sassauer scheduled. He's on the golf course, Sunrise 18. The DXY out 104. And for the pros out there, yen explodes 149, 150 out to a weaker yen, nudging to 153, 152.79. So in the market, there's lots going on besides an election in 13 days. We'll cover all that. Is Kaylee Lines scheduled to be with us?
She might be. I think
Let me look at my
we're
date
negotiating
calendar.
with her people at the moment.
Kay Lines.
7:45.
Yeah, 7:45.
How about that?
She will bring us up to date here 13 days in. Let's get right to it from the Interactive Broker Studios. Our Bloomberg Business Flash, Lisa.
And quite a busy morning right now. We have futures lower. This is with about 45 companies set to open their books today. We're already hearing from some of them. I want to get to AT&T. They're up about nearly 2%. Virtually flat sales, but fewer broadband customers and analysts expected. We're going to be keeping an eye on those shares this morning. Coca-Cola, they're up 1%, but a reported price mix for the third quarter beat average estimates. And Hilton, down 4%, lowered its profit outlook. The addition of new hotels in its global system, well, that kind of failed to offset that slower travel demand. We're still awaiting results from Boeing. We'll keep an eye on that. Those Boeing workers also voting today on whether to end that 5-week-long strike. After the bell, on to Tesla, IBM, and T-Mobile. Let's get to futures. NASDAQ futures down 0.3%, 77 points. Dow futures down 0.4%. S&P futures down 0.2%. We have the two-year yield 4.04%. That's little change. The yield on the 10-year 4.22%, and that is little changed. Stocks on the move. That's McDonald's. They're down nearly 7% after that E. coli outbreak tied to its quarter pounders.
A mess.
Yeah, definitely a mess. They're saying that maybe the slivered onions might be the cause of that,
saw that,
but we'll keep an eye on that too. Starbucks down more than 4%, and it pulled its guidance for 2025 sales plunge for a third quarter in a row. That's your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks on that. No jokes on this. This is what I studied in school, Escherichia coli.
No, yeah.
And this is what, people go, what did you do in school? Good morning to Egon Stark, the late Egon Stark, who taught me microbiology. Paul, this stuff is ruthless.
And
it's serious.
I'm surprised it doesn't happen more often. Because it's so rare. So, I mean, but, you think about all the fast food places all over the world and it just, I don't know. But anyway, I'm sure they'll get a handle on it. But I am a quarter pounder. That is my order.
That's your go-to?
That is my go-to.
Mine's a number 2 value meal.
Yeah,
and I say hold the ketchup so they'll make it fresh for me with mustard. I learned that from one of my offspring.
Wow.
Hold the ketchup.
Hold the ketchup, and then you get a fresh burger.
Speaking of Coca-Cola, is there any soda in Mateo household at all?
No.
See?
Used to do the Pepsi, but no.
Ben Laidler moved from America back to England to get away from McDonald's and the fast food America. He joins us now with Bradesco. It's important to talk to Ben Laidler when there's not a bull market, because he will have optimism on the American finance experiment. He joins us this morning to reaffirm a bull market. Ben, at what moment is this bull market?
I think we're having a sort of healthy pause here. U.S. economy's running pretty hot. We've got an election sort of 13 days away, and I think we're sitting on our best start to the year, or best sort of 10 months. What are we here for the S&P 500 since 1997? So I think a bit of a bit of a pause here, I think, is natural. But I think, scratch the surface. This is a strengthening and broadening bull market. I think you're seeing the earnings beginning to come through. I think the economy is running, pretty strong. And those are, I think, the foundations here.
Ben, talk to us about the earnings here. We're just kind of getting into the teeth of the earnings period right now. But we had some pretty strong numbers coming out of the big banks. What do you think the market needs to see out of corporate America this earnings season?
Well, so I think two things. I think one, you need to see, earnings beats. We came into this season with very low expectations, which I think is just a reflection of some of the economic uncertainty out there. But that setup, I think, is one that will easily be beaten. I think we're going to get pretty close to double-digit earnings growth, this season. But I think the second thing is just the broadening of the earnings strength. This has been a sort of one-legged earnings stool for the last 3-4 quarters. It's all been about tech. I think tech will be, relatively slowing, but I think everybody else will be beginning to pick up the sort of earnings baton. We saw that with the banks. I fully expect to see it with everybody else. And I think that is absolutely crucial to sort of both broadening this sort of fundamental recovery, but also, giving it some more support.
So, Ben, if some investors want to look at a broadening market, are there certain sectors that, aside from technology, that you think can be good performers going forward?
Banks is the obvious one. That's your sort of second biggest sector. Yeah. Healthcare, and maybe even sort of start to nibble at small caps and God forbid the rest of the world. It's everything other than tech. I think tech is absolutely fine. I think tech earnings are going to be good. I think valuations are supported, but the leverage to this sort of soft landing, lower interest rates, and where the cheap valuations are is basically everybody else, which we've all sort of forgotten about over the last few years.
To bring you up on the soap opera Days of Our Lives, and I am honored that Ben Laidler is here to discuss, David Costin and the Goldman Sachs team put out a note of basically a 10-year fan distribution exercise with a center tendency to an S&P total return of 3%. Last night, about 5 p.m., Edward Yardeni put out an absolutely blistering note pushing back against it. He not only reaffirmed the Laidler-Yardeni roaring 20s, he said you could even get a roaring 30s. What's wrong, Ben? You've done this at HSBC and other houses. Somebody says do a 10-year view with a fan distribution. How successful can that exercise be besides a marketing exercise?
Yeah, it's more of an intellectual exercise, I think. I guess, we'll see in 10 years' time how well that works out. But in all seriousness, I think it reflects the fact that US valuations are very high. I think they're more than justified. It reflects big techs, huge profit margins, strong balance sheets, supercharged growth, but they are high, one. And two, these very high profit margins. I think if you look at both those things versus history, you say, how much further they have to go. I would say on the US side, this is the universe has changed. It's all about tech now, much more than it used to be. That has higher growth, that has higher margins. So you're a little bit comparing apples with oranges, but that shouldn't take away from, I think, the opportunity set in the rest of the world. Profit margins are much more depressed. Valuations are much more depressed. They've got very small, very out of favor. And crucially, they're much more sensitive to what's happening right now, which is rate cuts and a soft landing. So I think you can have your cake and eat it. I think you can have both. I think the relative opportunity right now is the rest of the world, but I certainly wouldn't want to bet against the U.S.
HSBC is in their 14th reorg. I kid. Ben Laidler, are we going to see European banks all through a massive reorg?
I think European banks has been a very good place to be. And if you believe on my it's time to look at the rest of the world. That's your biggest sector in Europe. It's pretty much the cheapest sector, in Europe. I think they continue to do well if the ECB, keeps cutting rates, firms up the economy. It's one of the places I'd absolutely be looking at this sort of broadening bull market.
Ben, thank you so much. Ben Laidler with us with Bradesco BBI. It's good to have him on.
Yeah.
What do you think? Every other day?
Sure. That's no problem at all.
Every other day. Ben Laidler there. I wasn't going to go into it now because of Michael Barr's people said I've got to stop going to Michael Barr. I got to stop talking when Barr walks in the studio. But the answer is Ben Laidler has been a miracle since Christmas Eve of 2018. With our news in New York City, the miracle that is Michael Barr.
Thank you very much, Tom, Paul, Lisa. Defense Secretary Lloyd Austin confirms the movement of North Korean troops to Russia. Austin saying while they don't know why the troops are there, it could reveal Putin's concerns inside the front lines.
What it means in terms of where Putin is, you've heard me talk about the significant casualties that he has experienced over the last 2.5 years. this is an indication that he may be even in more trouble than most people realize.
Austin made his comments shortly before departing from Rome on his way back to the U.S. today. Ukraine and South Korea have repeatedly accused North Korea of sending troops to Russia to aid in its ongoing war. With 13 days until Election Day, the running mates of Kamala Harris and Donald Trump are also out on the campaign trail. Republican vice presidential nominee J.D. Vance campaigned in Arizona.
You don't have to agree with everything that I say. You don't have to agree with everything that Donald Trump says. But who can deny the results? And I'd ask those swing voters, are you better off today than you were 4 years ago?
Democratic VP candidate Tim Walz held a rally in Wisconsin last night.
We're running like everything's on the line because everything's on the line. Everything's on the line.
An E. coli outbreak possibly linked to McDonald's Quarter Pounders is blamed for one death. The CDC says almost 50 people have been sickened in 10 states. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney, Coca-Cola's earnings. What do you see out of it? I got one observation. What do you see?
Pretty solid. I mean, it's kind of, you think about Coca-Cola and some of these consumer staple companies, I just think of them as kind of GDP type companies, and so you look at that kind of return plus a return of cash, a dividend buyback, and that's kind of what you get.
I think we're going to see this in luxury. I was looking today at LVMH and all that, and they're struggling with China. All of their revenue gain and their smashing organic revenue growth of 9% seems to have come from price, not from unit. Revenues, folks, the top of the sales line, the turnover line, for fancy British people. The turnover line is made of price in units. And to Coke's great credit, they publish case volumes are 0%.
Yeah.
Which means they did it with price.
All price.
My radar's up.
Yeah, absolutely. You're right. You want to see how long can you do that? But we've seen from these consumer products companies, Tom, during the pandemic, boy, did they pass along their price increases across the board. When their costs went up, they passed it right along to me and you, and we see it in the supermarket aisles every day.
And now we poll the surveillance room. We're going to ignore Lisa. Michael Barr, are there Coca-Cola products in the Barr household?
That's like asking, do we breathe air? Yes, there are a lot of Coca-Cola
Ms.
products.
Mateo, your thoughts?
That would be a negative. 0. We have water and milk and.
Oh God, they're just terrible.
I mean,
maybe some cranberry juice. Maybe.
Oh my gosh.
You know what cranberry juice is used for in our house? To mix with vodka. That's what it is.
Okay.
Thank you. Her kids have the bags packed for college.
Oh yeah, they're ready to go.
June 7th.
Yeah, exactly.
They're like, see ya. One of her kids joined the military, called up the Pentagon and said, tomorrow, can we make this happen?
Yep. My mother's just
Cranberry
too much.
juice.
Cranberry, but it is for the cosmos. Thank you. It is for the cosmos.
Can I say that I never have
triple
Coke, Paul?
No.
And when I do, it tastes so darn good. When you don't have it a lot.
I think it's I've been saying this forever. It's the go-to drink for me. Best in the world if you need some. But I only do it like once or twice a week. Except I still have my daily fight with the people on the 6th floor here because they substituted real soda upstairs with this organic stuff. So I got to find a guy here who runs things at Bloomberg and figure out who I can talk to about
M. Bloomberg.
Okay, I'll talk to him.
We got a guy.
Yes. Yeah, we know a guy.
We got to go. Coca-Cola out, the stock off $2 this morning. Please stay with us. An eventful morning. This is Bloomberg Surveillance.
Now we'll look at some local headlines making news in the tri-state area. We're learning more about the arrest.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Business Flash brought to you by Interactive Brokers Portfolio Analyst. Consolidate and analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/freepa. All right, we've got futures falling, the start of another busy day of earnings. We told you about AT&T, Coca-Cola, Hilton. We're still awaiting results from big names like Boeing. Their shares right now down about 0.2%. Later this afternoon, on to Tesla, IBM, and T-Mobile. Let's get to futures. Nasdaq futures down 0.3%. We have Dow futures down 0.4%. S&P futures down 0.2%. The 2-year yield 4.04%. That's little change. The yield on the 10-year 4.22%, and that's down up about 1 basis point. Shares of Texas Instruments up 2%. An earnings beat. Its CEO said the timing is right for an order recovery. And a few companies making news. We'll start with Apple. Its CEO Tim Cook said the company will keep investing in China. He made those comments during a meeting with Beijing's top technology official. And finally, ARM. It's ending a license that allows Qualcomm to use its IP to design chips, and that's really going to start to escalate this big legal dispute between the companies. Qualcomm shares right now down more than 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. In the United Kingdom, Paul, one of the great rites of passage, and Mick Jagger is a young student at the London School of Economics, went down in flame. They have the math exam. You know, everybody gets in, and then you got to take the maths. And I'm honored to say I actually passed it. Differential equations, I just put a big X through it. But the answer is there's some people that do better than good in math. Joining us now, Remy Olu-Pitan, who's with Schroders in England. Thrilled to have her in today with the events going on in the markets, enjoying statistics out of LSE and, of course, also Durham as well. Nice to have you here. How bond rowdy is the rout?
It's quite bond rowdy. It's a little bit uncomfortable. The market doesn't like it when bond yields rise. Japan
40-year I looked at today, and it's down 34% from the price to perfection COVID peak. I mean, there's some pain out there. What are the ramifications of price down, yield up like we're seeing right now?
The ramifications are, do we need to worry about inflation again? That's the ramifications. And that's what the market is trying to get its head around. We've really enjoyed this idea of policy easing. Can we get as much policy easing as we expect? So that's the debate that's happening right now with investors. Maybe too much aggressive cuts were priced, and that's been priced out. In Japan, we're going to get more entertainment over the next couple of weeks with regards to the elections and what we expect.
She's our kind of guest. It's entertainment.
I know.
Joining us now, bada bing, the Ministry of Finance.
Exactly. So, hey, Tom, Schroders, by the way, I've been to their office. It's lovely. About a 10-minute walk from Bloomberg's Queen Victoria Street.
And the coffee.
Yeah, it's lovely.
To die for.
Awesome. I'm looking at your notes here. You mentioned China. You also added an overweight position in China. How do you do that? I mean, I've got a government. I don't know what they're going to do tomorrow. How do you think about China and maybe some of the stimulus we've seen coming out, either monetary stimulus, maybe some fiscal stimulus for China?
Yeah, on the fiscal stimulus, that will be really great because that will actually encourage growth. At the moment, we think that the monetary stimulus has been directed towards the equity market, and you can see quite solid gains in equities in China. So we see this as a trade rather than a long-term investment, but it's the kind of trade that can generate quite sizable moves. Now, it's taking a bit of a pause right now because the moves over the last previous weeks were quite excessive. So we're seeing a pause, but we believe it's a pause that one should be buying into.
Nice. I mean, I use Alibaba as my proxy for China. When I saw the Chinese government come in really heavy-handed on the Chinese tech industry 4, 5, 6 years ago, it just almost made, for a lot of folks that I talk to, almost uninvestable. But now you've got a trade potentially there. Talk to us about the European market here and the UK market. It screams valuation. But it's always screamed valuation, hasn't it? How do you guys think about allocation U.S. versus maybe more Europe?
Okay, I'll try not and to move emotions away from this and just speak objectively, I think the challenge we have in Europe is that the makeup of our indices are quite different. We don't have a lot of the exposure to tech and growth and strong earners in the European equity indices.
You have like two companies, SAP and ASML.
Yes, that's what drives, that's what has driven performance over the last couple of months. So it's quite tough for us in Europe. So we are a little bit behind just purely because of the makeup of our indices. So we rely on the banks. That's where you need to see earnings growth. And then
so is that where you see the opportunity? This is critical. Schroders with a venerable history. Do you look at what Amati's doing, UniCredit over to Commerce Bank? Are finally the European banks going to get their act together and compete with Jamie Dimon?
We need to curb our enthusiasm there. It will take a little bit more time because the challenge we have is that the European banks require strong European growth, and what you've seen is we're not getting that.
Well, Lagarde
just yet.
talking to Francine Lacroix hedged the whole thing. It's not there. My interview, not my interview of the year, Paul, one of my 5 great interviews last year was Gentilini of Italy, and he just said, I said, is Eurosclerosis gone? And he said, no, it isn't. Can you state on a broad economic basis, using fixed income as the thermometer, that Eurosclerosis is still evident?
It will come back. It's not evident at the moment, no.
So, Remy, how about on the fixed income side here? We've got rates moving. Again, the U.S. 10-year is now at 4.21%. Where do you see opportunities in fixed income? Do we stay with my 2-year Treasury at 4.04%, or you maybe take some credit risk?
Credit is looking quite interesting, but unfortunately you will have to go up the risk curve for that, particularly in the case of high yield. Now, the most important thing is that we're not predicting a slowdown or a material recession in the US. If we don't predict that, then high yield debt is really quite interesting because you do get a really juicy pickup. You're not getting that in investment grade just yet.
So are there some sectors in high yield that I should be looking at? Because I know there are a lot of, whether it's tech, telecom, media, whether it's the banks. Where do you see high yield sector attraction?
I must say, that's not my strong point, so I'm looking at high yield as a whole. I can think of the regional side of high yield. We prefer European high yield here. But as a broad area, we think high yield is quite attractive.
I have a chart of the year I'm working on, and I have Bob Michael at a Bloomberg event this afternoon with JP Morgan, and we'll talk to him about it. Let's get started with you. The Bloomberg Total Return Index is shocking how it's recovered over the last number of months. Price up, yield down. Can we get back to the linear extrapolation of a 20-year great moderation? To me, that's the chart of the year.
Yeah.
The idea in your world that we would recover back to what the nirvana that we knew, do you frame that as Schroders, that we can get back to that level?
To get back to that level, we need to move back into an environment of deflation. We need to move back into an environment where central banks are fighting deflation rather than being concerned that inflation is still in the background. Now, we don't think we'll get back to that kind of environment of the great moderation this decade. We think the great moderation is over.
Paul, I got the chart back to 2007. We're now within 1 standard deviation of the long-term trend. No way I expected this. The worst moment was November of 2022 when the bull market began.
Yep, absolutely.
Do you know that there's a bull market in bonds?
I didn't know that.
I did not know that.
I did not know that.
There's a bull market in credit.
Remy, real quick, 30 seconds. You're in the center of the City of London. How is the City of London these days? How are the shops? Are people back? Is it hopping? What's going on?
The City of London is booming. But you have to be careful when you think about the shops. It's tough for retail, but it's great for hospitality. So people want to do things rather than buy things.
Okay. All right, well, we'll get to the city, Tom. Let's get over to
Road
Victoria
trip.
Street.
Remy, thank you so much. Remy Olu-Pitan with us with Schroders here in the bond market. I'm going to work up this chart. It's going to take a while, folks. I'm going to run it from, I think I'll run it from 07, 08, not from COVID, but it's October. I got a chart of the year. Credit has come back.
Credit has come back.
Price up, yield down.
Yep. Absolutely. So
Extraordinary.
high yield is, I mean, you look at the IN-GO function on the Bloomberg terminal and look across fixed income returns.
Yeah.
U.S. high yield's been the best performer.
McDonald's affecting the market. The Dow off 0.5% right now, 217 points. SPX down 15 points. The VIX, though, in under 19, 18.59. From New York City, stay with us on YouTube. Subscribe to YouTube, Bloomberg Surveillance.
Bloomberg Sports Report is brought to you by Audi. Visit your tri-state Audi dealer today and get behind the wheel of the Audi model you've always wanted. S&P futures down 14, the Dow down 215, NASDAQ futures are down 73. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still falling. This as investors pull back bets on rapid policy easing. Most Fed officials speaking early this week said that they favor a slower pace of rate cuts. You had Bank of America CEO Brian Moynihan urging the Fed to not go too hard on rates. More economic data out this morning. U.S. mortgage applications, both home purchases, refinancing, dropped last week, the lowest level since August. That was due to the recent surge in mortgage rates. MBA says the contract rate right now, 30-year fixed mortgage, mortgage, well, it held steady, 6.52%. All right, later this morning, we'll get a read on existing home sales. That's at 10 a.m. Wall Street time. We have NASDAQ futures down 0.3%, Dow futures down 0.5%, S&P futures down 0.2%. The 2-year yield 4.05%. That's up 1 basis point. The yield on the 10-year 4.22%, and that's up 1 basis point. On to commodities. Brent crude $74 a barrel. WTI crude $70 a barrel. We have spot gold at $2,750 an ounce. Shares of Deutsche Bank down nearly 2% in Germany. Traders reported a beat, but its bad debt rose, doubling from a year earlier. Then you have Heineken up nearly 2% in Amsterdam. Volume declines in key markets, but here's the thing, they were offset by higher pricing. And finally, shares of Volvo car lower after it lowered its full-year retail sales forecast. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. We're really focused on bonds today. It is a bull market. Futures negative 15, but there is a global bond rout. I focused on the Japanese 40-year. Thank you to our Tokyo desk for wisdom on that. But it's just out there in general, which I think means price down, yield up.
That's what I learned in bond class.
I think we learned that.
Yeah, but that's as far as
Steve Laidley was at Wharton years ago. He learned price down, yield up, got him a job at BlackRock finally. They said, Mr. Fink said, what do you think? He said, price down, yield up.
Yep.
How price downy are we this morning? Is it a bond rout, Steve?
We're up a couple basis points from yesterday. I mean, the big move happened post Fed, as you guys know. I think that caught a lot of people a little bit by surprise. The data has been coming in, fairly strong, as we talked about. There's a lot to sort of unpack there. About half the move, and it was interesting that it was sort of not uniform, but it was roughly in line across the curve. You saw a backup of sort of 50 to 60. Give or take, half of that was inflation expectations. So that's interesting as well.
Where are people putting their money in fixed income ETFs right now? Are they going full faith and credit U.S.? Are they trying to buy the BlackRock fixed income Vietnam fund? Where are they going?
Yeah, I mean, most of the flows so far this year, and we've taken in, we're approaching around $80 billion in iShares.
Yeah, wait. You took in $80 billion?
Yes. We just
I'm
crossed.
doing the math. He gets 0.00052%. It says 6,000 square feet in the Hamptons. Continue.
Goodness.
So we and then we just crossed a trillion globally in fixed income iShares. But where the money went this year, for the most part, was high quality. So we saw, call it 30-ish billion into multi-sector. The ag is a huge part of that. After that, it was actually treasuries. And the interesting part about that, people talk about TLT. That was the largest flow in treasuries this year. That was around 10-ish billion. But the next largest flow was actually our 0 to 3 month T-bill fund. So it's really hard to call which, if there's a certain part of the curve that investors are interested in. It's sort of barbelling. And then the third largest flow in treasuries was actually, the 7 to 10 year. So it's kind of spread pretty evenly in treasuries. After that, it's kind of mixed. You had some flows into investment grade, mortgages, and then high yield's a little bit of a mixed bag. But mostly high quality story this year.
Tom, he's a player at BlackRock. He's out in San Francisco. So my question was, how did we get him today in studio? You know what? He's going to be speaking with Katie Greifeld today at the Bloomberg Future of Fixed Income Conference this afternoon. That's how we got him.
He's not speaking. He's going to be grilled by Greifeld.
Grilled by Greifeld. Yeah, good luck for you, my friend.
He's going to be absolutely grilled
with Katie Greifeld. So, all right, $1 trillion in assets globally. Who's giving you guys this money? Is it registered investment advisors out there on behalf of retail investors? Is it big institutional pension funds? Who's giving you guys all this money?
I think the stickier money long term has been a wealth story.
Okay.
But I think starting, and it was a trend for a while, but we were seeing institutional adoption, but the COVID volatility, that February-March period of 2020, we saw a huge surge in institutional adoption during that period of time, and that kind of continued. Those flows tend to be more tactical, so they're a big part of our trading volumes and liquidity. I think the longer term money are asset allocators, right? Wealth platforms, models, things like that, RAAs, right? So
my question of the day, and I'm going to do it, I'll be at the summit this today with Bloomberg with Bob Michael of JP Morgan, and he's been dead on about price up, yield down. Really has nailed the call this year, as I'm sure you have at BlackRock, Steve. But the basic idea is my chart of the year is we were down 6 standard deviations on price. We cratered, we hemorrhaged off of the great moderation. And it's stunning how we've come back this year. Can you model that out for 2025?
Well, yeah, it's tricky. We have a lot to...
I agree, it's tricky.
We have a lot to unfold. I think as far as yields go, I don't necessarily think we're expecting, a spike in yields. I know there's some aggressive calls in the market right now. We'll have to see. We've got this debate about soft landing versus no landing, et cetera, but I don't think that we're necessarily going to spike to 5%. I think
to our listeners and viewers on YouTube, it's real simple. Can I find shelter in fixed income to have another 12 months of making the coupon without getting hammered because I missed the bull market of 2024?
I think where we like is the intermediate part of the curve for that. So if you kind of look at returns year to date, we're positive in fixed income if you look at the ag and if you look generally at broad market metrics. Where we've outperformed has been in that sort of, call it the 1 to 5 part. We still like that a lot for value. If you look at yield versus duration, Tom, I think that's where you're going to still see your best risk reward is in that sort of middle part of the curve. Now, if it comes down to treasuries versus IG, I think that's more of a call on your economic view. Do we do the soft landing? Do we stick it? We still prefer high quality. So whether that's multi-sector treasuries or IG, I think that's sort of where we think you should kind of be.
But the best performance in the fixed income business has been in high yield.
Yep.
So
and
how
that's
do you explain
like 3
that?
years in a row now.
Yeah.
No, the carry's great, and I think there's a lot of discussion about how spreads are now below 300. True. I think some of your earlier guests were talking about this. Again, you're going to have to take a view on where we land economically. We do see people allocating to more defensive high yield. So we do have a high yield defensive product. It's called HYDB. We've seen flows into that this year. It's going to be, a little bit tricky to play that. The carry's been great. You have had double-digit returns last year. You're sort of high 7s this year, right? So it is an interesting place to be, but you're going to have that call.
Go ahead.
No, I was going to say, anytime we get ETF folks in, Tom, I always like to ask the question, where are the funds going now? Because so much money's rushing into the ETF business. Where's it going for you guys?
Yeah, and I think that trend will continue. We're going to see cash move off the sidelines because I think up to this point, you've seen investors pretty far underallocated to fixed income. Makes sense. So if you think about the last, however many years, I mean, we can talk in decades, but we've had very low yields post-crisis. Then we had this tightening cycle, which was, the most aggressive cycle we've had in a long time. And so, that caused a little bit of shell shock, but I do think the opportunity's there. We are at yield levels we haven't seen since the early to mid 2000s. So you will see people moving. Now, question is, you get this rate cut cycle dragging yields all the way down? Probably not, but we believe we'll see people moving out of cash and into that intermediate part of the curve, especially. I
mean, Paul had a question, or I have one final question as well. Do they let you in the Bitcoin meetings in ETF BlackRock land? Are you allowed to go?
Well, I'm allowed to go. It's not my area of expertise, but I don't suppose they'd lock me out.
What a marketing, I don't want to get into BitDog and all that, folks, but Paul, on a marketing campaign of the year success?
BlackRock.
Wow.
Incredible. I mean, I think Larry Fink carries Steve's bags. I think that's what happens when they go marketing.
It is.
That's how it works. I mean, he's got the ETF business.
So,
unbelievable.
Are you clipping coupons or finding total return out in 12 months?
I think you're probably still leaning on the carry because I think right now credit spreads are really tight. I don't know if you're going to see a lot more compression in that. So I think you're going to be relying on the coupons.
Just moving on and moving. This has been great. Steve Lappy, thank you so much. What a half hour. Our team, we got a new set of interns in.
Oh, we do? Okay, good.
The autumnal interns.
Yeah, very good.
They spent all day yesterday. They started at a bar at 2 p.m. deciding what to wear for Halloween.
Yep. You got Lapley in studio.
Yeah,
how good
3
is
of them
that?
are going as Taylor Swift. It's amazing
exactly.
how that works. Steve Lapley with BlackRock as well. But just great conversation on the bond market amid this stock bull market. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. Defense Secretary Lloyd Austin says that the U.S. has evidence that North Korea has sent military forces to Russia.
What exactly they're doing, left to be seen. These are things that we need to sort out.
Ukraine and South Korea repeatedly accused North Korea of sending troops to Russia to help in the war against Kyiv. Austin made his comments before departing Rome. Secretary of State Antony Blinken says Israel needs to pursue an enduring strategic success after its tactical victories against Hamas. Today, he urged it to seek a deal that would end the war in the Gaza Strip and bring back dozens of hostages. He spoke before traveling from Israel to Saudi Arabia on his 11th visit to the region since the outbreak of the war. Vice President Kamala Harris supports raising the federal minimum wage to at least $15 an hour and will push Congress to make it happen. Donald Trump promises tax breaks for car purchases, but only for vehicles made in the U.S. Trump's running mate, Republican Senator J.D. Vance, campaigned in Arizona and mentioned Harris's running mate.
Governor Walz has to go around and somehow convince the American people that Kamala Harris is going to solve the very problem she's been creating over the last 3.5 years. That is tough. We should feel bad for him. We should say a prayer for Governor Tim Walz because that is a tough, tough job.
Meanwhile, Governor Walz was in Racine, Wisconsin last night with a dig at Trump.
Here's the good news, Racine. He is never going to be president again. He is never going to be president.
13 days are left until Election Day. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
I really had pause, Michael Barr, yesterday. Paul, I don't know if you remember this. The world stopped in 1981, and America was transfixed by one baseball player. It was, it was just unbelievable what this kid did for the Los Angeles Dodgers.
Fernando.
I've read a lot of the stuff out on the death of Fernando Valenzuela. Fernando mania, I hate the phrase, but it's true. But Michael Barr, it was just extraordinary what that kid did for L.A. and for America.
I got caught up in it big time. And to be honest, I mean, his rookie year, and then I go back and I listen to his no-hitter, and then I hear Vin Scully with the calls. It was just terrible. He was only 63.
Yeah, not sure what happened there. And for those out there, the younger folks out there that who hadn't seen Fernando, go check out on YouTube some of the videos of him pitching, because in his windup, he would, at the top of his windup, he would look up at the sky, like look up at heaven or something before he delivered the pitch, and we're like, aren't you supposed to be looking at the plate? And anyway, it was just phenomenal.
A lot like Olu-Pitan, but the only one to be Rookie of the Year in Cy Young in the same year.
Right? Yeah.
I mean,
I forgot about that. Yeah.
Extraordinary. I'm sure this will be. Is the first game of the World Series, Michael Barr, Friday?
It is Friday at Dodger Stadium.
And Fox, they've been medicated over Yankees, Dodgers. Are you kidding me?
Oh, my goodness. Yeah.
I'm in
Ohtani,
consultation right
Judge.
now. I've not decided if I'm going to be Dodgers or Yankees. I'll make that announcement Friday morning.
Very good.
It's, there's a...
The games are late
10,
at night,
15,
though. This
10,
is tough.
15 people involved.
Who's staying up there?
Haley Koufax emailed me. She said, you got to go with Chevis Ravine. And I said, well, the food is better at Chevis Ravine than Yankee Stadium.
We'll talk to Doug Gass.
We'll have to see on that. Serious stuff. For all of you worldwide, we're out on YouTube. Subscribe to Bloomberg Podcast, growing each and every day. I'll get out on YouTube live chat here in a moment on your commute in America. Sirius XM, good morning on the old satellite technology, killing it. Apple CarPlay, Android Auto as well, and on Spotify on the podcasts. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We were waiting to hear from Boeing, and we have. The company had negative free cash flow of $2 billion in the quarter. Now, CEO Kelly Ortberg made his first public presentation. He said the company's at its crossroads, and it'll take some time to fix. He also said among the most immediate tasks on hand, ending the machinist strike. Well, workers will vote later today on whether they want to ratify a contract offer. Checking in with shares of Boeing, they're down about 1%. To futures now, NASDAQ futures down 0.3%, Dow futures down 0.5%. We have S&P futures down 0.2%. The 2-year yield at 4.05%. That's up 1 basis point. The yield on the 10-year 4.23%, and that's up 2 basis points. To currencies, we have the dollar stronger. Japanese yen down 1% at 152.96 against the dollar. We have the euro, British pound weaker. Bitcoin down more than 1.5% at around 66,000. Few companies making news. American Airlines, it's agreed to a $50 million civil penalty over claims that it violated rules protecting passengers with disabilities. And the Wall Street Journal reporting Frontier Airlines is exploring a renewed bid for Spirit. And finally, Bloomberg reporting Rivian racked up more initial serious U.S. safety violations than any other automaker since the start of last year, and it only has one factory. It's a good big take story. Take a look at it on the terminal. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Bloomberg Surveillance this morning, we're brought to you by IBKR. Thank you. IBKR Financial Advisors switch to Interactive Brokers for lowest cost, global trading and turnkey custody solutions, no ticket charges, no conflicts of your interests at ibkr.com/RIA. So what we're supposed to do is do things different from the zeitgeist that's out there.
All right.
But with Kayleigh Lyons, I got to go zeitgeisty this morning. Kayleigh Lyons-Jones joins a host of Bloomberg Balance of Power with Joe.
I don't know.
Joe Matthew. With Joe Matthew.
Okay, he's pretty good at it.
Kayleigh, I got to talk money. I got Elon Musk prancing around. I got Bruce Springsteen holding concerts. He's a gazillionaire.
Yep.
I got Bill Gates with 50 million large. Are the billionaires taking over the election?
Yeah, well, they're certainly actively engaged, Tom. Elon Musk with $75 million in contributions to America PAC and giving out $1 million a day through a sweepstakes to registered voters who signed a petition regarding free speech and the right to bear arms. And Bill Gates, according to the New York Times, contributing $50 million to Future Forward, which is an outside group promoting Kamala Harris, specifically their nonprofit arm. So this is dark money. This is a group that does not have to disclose its donors. This was not supposed to come to light, Tom.
Dark money. I remember John McCain tried to do something about this, the wonderful late John McCain, and it went down, I think, in Supreme Court, whatever, in flames. So what these people are doing, there's no like illegal. It's like they're playing fair.
Yeah, this is legal. They can contribute to these organizations. It's a nonprofit organization, therefore it could have never been disclosed that Bill Gates gave this money, and the New York Times is just reporting this based on private conversations he had.
Right.
He did provide a statement to the New York Times. He says this election is different, which is perhaps what drove him off the sidelines.
So when I get an email from one of the two candidates and they want me to send in $47, it's really not moving the needle, Paul, right?
I don't think so, Tom, but they'll take your money. And I'm getting spammed in my text messages.
Oh, yeah, we all are.
Goodness, for money. And it's only Democrats, by the way, so they get a very strong ground game there. Speaking of money here, Kamala Harris backing a $15 minimum wage. I kind of think, and I had to Google it, the U.S. federal minimum wage is $7.25, but a lot of states, a lot of parts of the country already have something like $15. But for me, whatever Amazon is paying, that's the minimum wage in any given market. How important is something like a federal minimum wage of $15? Is it a big deal for the candidates?
Well, there's certainly Kamala Harris is trying to make it one after Donald Trump, when visiting McDonald's over this past weekend in a stage visit where he was, working the fryer and everything. He was asked about the minimum wage and he didn't really answer the question, which is what Harris was trying to seize on in her interview with NBC that aired last night, saying she does support a $15 minimum wage at the federal level, though she acknowledged that it's going to require cooperation from Congress. And that's really the fact of the matter for any of these economic policy proposals, or the vast majority of them that these candidates are moving forward. They can't get get it done without congressional buy-in. So the balance of Congress is going to very much make a difference, whether we're talking about the wages people are paid or the taxes they are paying, as we're continually seeing more tax proposals rolled out by these candidates, including Donald Trump yesterday in North Carolina, talking about a tax credit to help aid the purchase of cars, but only cars made in the U.S. Forget the Asian and European models.
New York City, New York State, $15 an hour right now, minimum wage. French Hills, Arkansas, $11.
Oh.
So if President Harris gets her way, it's a 36% minimum wage boost in Arkansas. Some of the state-by-state dynamics.
Yes,
Paul?
7 states and Washington, D.C. Already have $15 or more minimum wage. We're talking about economics. It's the economy, stupid. But, Kaylee, is there any issue here for the next several days until we get to the election? Is there any issue that seems to be having any real traction out there for either candidate?
Well, what Kamala Harris's campaign is going to focus on in the final days here, and we're seeing borne out this week, is specifically the issue of reproductive rights and abortion. She's interestingly going to spend some of her time this week on Friday in Texas. This is not a state she's going to win when we're looking at the Electoral College. This is not a swing state. It's bright red. It will go for Trump, but she's going there to make the message about abortion resonate on a national level, as Texas is one of those states that has very restrictive policies in place. She'll be joined by Colin Allred, the Democratic Senate candidate in Texas that's in a surprisingly tight race with the incumbent Republican Ted Cruz. But that's really where she's driving a lot of her messaging, as well as trying to reach across the aisle to moderate Republicans by having people like Liz Cheney, the former Republican congresswoman, join her on the trail this week.
Kaylee, you do smarter interviews than we do on this stuff. There's no question. I mean, even with the albatross of Joe Matthew around your neck. What's the most important interview, the most interesting interview you've done in the last 48 hours? Give us one vignette into Balance of Power.
Oh, this is a tough one, Paul. I mean, we've had some really insightful conversations about specific demographics. Tom, I'm sorry. I woke up so early this morning. I know you guys do this every day, but this is not my normal now. It completely throws off my brain.
We call this doing a Lisa
Tom
Mateo.
Keene.
Good, go. Which story?
Tom Keene. We talked yesterday with the president and CEO of Voto Latino, who have just done some polling on Latino voters specifically and their proclivity to vote for Kamala Harris or for Donald Trump. Interestingly, they are finding that Latino voters do overwhelmingly support Harris in the number of battleground states that matter. But these are the kind of demographic groups we're seeing outreach on the part of both candidates doing. Latino voters, black voters, and this research is really valuable as we look here at the final stretch of this campaign, and who actually is not just making a decision who they want to vote for, but whether or not they're going to show up to vote at all. Certainly we are seeing that, as more than 15 million people across the country have already voted, and Election Day itself is still 13 days away.
How about down ballot, Kaylee? Is there any kind of growing consensus within Washington, D.C., how it might play out in the House and the Senate?
Well, those races are getting tighter too, Paul, as we're seeing a tightening in the presidential race. And I said Paul's name right there. Sorry, Tom. As we're seeing a tightening in the presidential race, you're seeing it in some of these down ballot races as well. Specifically, Pennsylvania is where a lot of noise was made this week, as the Cook Political Report moved what was a leans Democratic race in their ratings, the incumbent Democrat Bob Casey, to now being in a toss-up with former Bridgewater executive Dave McCormick. And if it's that close for Casey in Pennsylvania, that isn't necessarily a good sign for Kamala Harris. And you're seeing it in some of these other states as well. In Wisconsin, with the incumbent Tammy Baldwin's race. In Michigan, where Alyssa Slotkin is going up against Mike Rogers. All of those kind of races that could ultimately decide the balance of the Senate do seem to be tightening as well. So we're watching a number of them, including, as I mentioned earlier, the Colin Allred, Ted Cruz race in Texas, as well as Florida, where Rick Scott is facing a challenger. Those are probably the two best pickup opportunities for Democrats at this point, but things overall are looking pretty good for Republicans.
Joe, thanks for joining us this morning. Joe Matthew here with Balance of Power.
I deserved that.
Look for them at 12 noon today. Kaylee Lyons here getting it done and really focused on this election of 13 days. Okay, there was Lou Grammatico. He was in Foreigner. Valenzuela was blowing up L.A. 1981. But this is about Mick Jones, who was Foreigner. And I can't say enough about, Paul, this is like a song before computers that sounds like computers did it.
Yep.
But it wasn't computers. They were in a studio grinding and grinding and grinding out takes. An extraordinary effort. This is for everyone touched by Fernando Valenzuela, Foreigner.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Lisa Mateo, Michael Barr. Another hour of equities, bonds, currencies, commodities. Paul, last hour, bonds. It's a bond route. Ruth Carson telling me at Bloomberg there's a bond route out there. Price down, yield up worldwide. This hour, equities. Robert Dahl will join us here in a moment.
When I got on the street, Bob Dole was a big person you had to talk to.
And
he's
still big,
he still
like
is.
Laidler and like Gina Martin Adams and others saying, stop with this timing. You have to participate to win.
Yeah, exactly. What we hear from the pros, Tom, if you think about valuation as an opportunity to get in or out of a market, that's tough work right there.
Our new distribution, we're on YouTube. Subscribe to Bloomberg Podcast, growing each and every day. Really just extraordinary, that response. Good morning internationally. Good morning in the Philippines with serious floods there overnight, down to Indonesia, over to India, of course, the evening in Asia, and, of course, the afternoon in Rome and Europe as well. Good morning on YouTube. Apple CarPlay on your commute in America, Android Auto as well. Good morning to Quarter, 99.1 FM Washington, home of Kaylee Lines. I misspoke there. Bloomberg 1130 here in New York with a big Bloomberg seminar today. Thrilled to talk to Bob Michael here in a number of hours. In 92.9 FM in Boston as well. Bloomberg Surveillance this morning. We're brought to you by Cohn-Resnick Advisory Assurance Tax. Discover game-changing strategies to maximize value, to optimize performance, to manage risk. Put your business at the forefront. We thank Cohn-Resnick for their support. I'm out of breath. I mean, Kaylee was just killing me.
Yep.
Can you bring in Mr. Dahl this morning?
Well, let's go to Lisa
gotta go.
Mateo
I'm sorry.
first. I mean, if we don't do Lisa Mateo, Tom, we are in the timeout chair.
I'm still in Rome driving a Vespa with that Bloomberg business, whatever it is. Lisa Mateo, Lisa, save me.
I will save you. You are in the timeout chair. Futures right now still falling. About 45 companies had to open their books today. I want to start there. We'll start with Boeing. They're down right now about 0.6%. Negative free cash flow, $2 billion in the quarter. CEO Kelly Ortberg saying the most immediate task on hand right now, ending that week-long machinist strike. Workers vote later tonight on whether they'll ratify that contract offer. AT&T, we have up 3%, reported virtually flat sales on fewer new broadband customers than analysts expected. You have Coca-Cola raise its outlook. Consumers continue to pay those higher prices. And Hilton down 3%, lowered its profit outlook as the addition of those new global hotels will really fail to offset the slower travel demand. After the bell, Tesla, IBM, Mobile, wait for that. Futures right now down 0.3%. Dow futures down 0.4%. S&P futures down 0.2%. We have the 2-year yield 4.05%. That's up 1 basis point. The yield on the 10-year 4.23%, and that's up 2 basis points. McDonald's on the move, down nearly 6% after that E. coli outbreak tied to its quarter pounders. And then you have Starbucks down more than 3%, pulling guidance for 2025. That is your Bloomberg Business Flash. Tom and Paul.
Paul, you had a pithy note. You pay $7 for your pumpkin spice latte there?
To be honest with you, it used to be a daily thing for me, Starbucks. It is no longer. It is now kind of once a week for a variety of reasons, not the least of which is, man, it's expensive.
Right. Do you know the only one that knows what Sanka is besides me is Bob Dahl?
Exactly.
He's the only one that knows.
Bob Dahl, he is the CIO of Crossmark Global Investments. Bob, I'm not sure what the focus on here for these equity markets. Is it the Fed? Is it interest rates? Because we're right smack in the middle of earnings season. Is it earnings? Is it interest rates? What are you focusing on these days?
Yes, all of the above. Okay. Look, these days, meaning the near term, it's about earnings. We are heavy duty into third quarter reporting, as you well know, and that's what's driving stock prices, the market overall, and individual issues. But the other issues all matter. When you have the 10-year yield moving from 350, 360 up to 4.25 in not too many weeks, that's got to bum people out, especially when you have valuations where they are. And so to move to valuations If you guys had said to me, Bob, by October, you're going to see a PE of 27 on your screen, I'd say no way, no how. Yep. Not possible. But that's where we are. And that has everything to do with long-term returns. As you pointed out a few minutes ago, valuation does not tell you what to do today or tomorrow, but it does give you a sense of your long-term return or risk chances. And 27 is not a very good place to start if you want to get a good return over the next 3 to 5 years.
So where do we go, Bob? Where do you think the opportunities are here? Or do you say, hey, I got an election coming up, I'm just taking risk off the table here? What are you telling your clients these days?
So I remain fully invested. We are in a high-risk, momentum-driven bull market. Bull means up. Momentum-driven means FOMO and everything else you can think of. Tom's buying a stock, so you better buy some too. That's what's going on. Yeah. And predicting end of a momentum-driven bull market is a fool's game. So you just got to be careful what you own. So to your question, and I'm a broken record on this, I want to own companies that have high earnings predictability, high earnings persistence, and good free cash flow. I think they can weather a valuation sell-off when we get one.
So let's take a Bob Dahl short-term 3 years. David Costin making a splash at Goldman Sachs with a fan distribution what if of low single-digit returns out 10 years. And there's lots of hedging, and to give them credit, they fairly write it up with all the what ifs out 10 years. Ed Yardeni yesterday, Bob Dahl writes a scathing note recommitting to the roaring 20s, and dare he say, the roaring 30s as well. He's at the upper end of the fan distribution. Does Bob Dahl use fan distribution of what ifs out 3 years, 5 years, 10 years?
I read both reports. They're both excellent reports. I lean to the Costin view. Sadly, I hope Ed Yardeni is right and that David and I are wrong. But I've been using 5 when clients ask what's the 5 to 10 year return for stocks, 5% per annum, for the same reasons that great Goldman report was put together. Look, you can get into anomalous periods, and that's what Yardeni's arguing, that we are in a roaring 20s. And at the end of that report, he said maybe we'll have the roaring 30s as well. So who knows? But risk reward tells me for the long term, I'm probably not going to get a great return. Doesn't mean I can't make money, and you got to be invested here in the near term.
Bob, what are some sectors here that screen on a relative basis better for you? Is it some of the big tech names that have been the leaders over the last number of years, or is it something else?
Financials are my favorite here. They are benefiting from the economy doing okay, from a possible Republican sweep, and they're pretty cheap stocks. A lot of the lending this cycle took place outside the banking system. So balance sheet risks, they're there, but nowhere near what they usually are. So that's my favorite sector.
Bob, talk to people that have enjoyed missing the Bob Dahl bull market. Ben Laidler was on earlier, his courageous call at HSBC Christmas Eve of 2018. Ralph Ancampora and Yardeni 2 years ago in October, many other people like you saying, stay invested. Talk to the people that are scared stiff.
Yes, right. So it does not pay over the long term if you have no information to be out of stocks. Stocks beat most other major asset classes most of the time. That's the starting point. Then you can get more sophisticated after that. But look, we're always scared. Market stocks in particular love to climb a wall of worry. Yes, we're worried about elections. Yes, we're worried about earnings. Yes, we're worried about valuations. We're worried about the Fed. All kinds of things, not to mention the geopolitical issues. But you got to be invested if you're going to make those long-term returns, notwithstanding that long-term comment that Costin and I are making about valuation starting point.
So if valuations are rich here, how do you think about just asset allocation, stocks, bonds, and maybe even alternatives here?
So depending on your alternatives, I'll start there. I manage an equity market neutral funds, one of my favorite children, if you will. 100 longs and 100 shorts. That's an absolute return portfolio. If stocks are only going to give me 3, 4, 5 over the next 3 to 5 years, we ought to be able to beat that with much lower volatility. So look for some alternatives that fit the bill. I think most financial advisors 5 years from now are going to look back and say, why did I not have more alternatives in my clients' portfolios?
I mean, Bob, all I care about, it's sort of like Detroit Lions, Minnesota Vikings. Lehigh's going back and forth. I mean, Lehigh beat Princeton. That's pretty cool. They'd have some tough losses here to Bucknell. What was that about? They lost to Bucknell. I mean, Lafayette, Lehigh, the end of the year. I mean, that's like 100,000 people show up, right?
It's the longest rivalry, as you know, and it is a party and a half.
Good. Bob Dole, thank you so much. We'll look forward to Michael Barr's taking notes here. Lafayette and Lehigh.
Oh, yeah.
Right in his backyard.
The longest goal I ever scored in my NCAA vaunted career was from inside my blue line. And the puck went in the net. And they said to the goalie, "How did you lose the puck?" He said, "They grew trees in the back of the ice rink." He lost the puck in the pine trees. Welcome to Lehigh. Good morning, Bob Dahl. Great to see you. Good morning to Pennsylvania as well. Big vote there. Futures -15 with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Defense Secretary Lloyd Austin confirms the movement of North Korea apparently aiding Moscow.
We are seeing evidence that there are North Korean troops that have gone to Africa. Now, not Africa, but Russia.
Secretary Austin says while they don't know why the troops are there, it could reveal Russian President Vladimir Putin's concerns inside the front lines. Austin made his comments before leaving Rome today for the U.S. Secretary of State Antony Blinken continues his diplomatic trip to the Middle East at the Tel Aviv airport today before heading to Saudi Arabia. Blinken remained hopeful of renewed ceasefire negotiations after the death of top Hamas leader Yahya Sinwar.
I believe that with Sinwar gone, because he was the primary obstacle to realizing a hostage agreement, there is a real opportunity to bring them home and to accomplish the objective.
Hamas has said it wants to see the implementation of a three-phase ceasefire plan previously laid out by President Biden, which calls for the eventual withdrawal of Israeli forces from Gaza. That is a condition, though, that Israeli Prime Minister Benjamin Netanyahu has rejected. No hand counting of ballots on election night in Georgia. The state's highest court rejected controversial rule changes passed by allies of former President Donald Trump on the state election board. Former Georgia State Representative Scott Turner, a plaintiff, says a collective sigh of relief was heard from around election officials in the state. Turner also founded the nonprofit Eternal Vigilance Action Group. He says the quick unanimous ruling by Georgia's Supreme Court erases all doubt that the new state election board rules are unlawful.
The problem with the rules is they were passed in an unconstitutional manner, outside of what the legislature had intended. I'm a Republican, and this is a conservative policy organization. I don't like fighting my friends, but in this instance, fealty to the Georgia Constitution demands it.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Out on YouTube live chat, do we buy the McDonald's dip? I would buy it because Sweeney worked there for a brief period.
Yes.
How brief was your brief period?
2 days.
Did you have a name tag? Did they make?
Yeah, I was a French fry guy, but it was not my cup of tea. So
yeah. Did you oversalt them?
I might have done that exactly. Yeah. It's pretty precise, but it's real work, and a lot of people. It's good stuff. They employ a ton of people.
It's a beginning of a career.
It's a beginning of a career.
The food chain, no pun intended.
Yeah, absolutely.
It's very cool.
I mean, they've employed a gajillion people over the years.
McDonald down 7% off this real difficult food poisoning out in the Midwest. Bloomberg surveillance.
Now we'll look at some local headlines making news in the tri-state area.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures lower, and this is at the start of another busy earnings day. We already told you about Boeing, AT&T, Coca-Cola, Hilton. Later this afternoon, on to Tesla, IBM, and T-Mobile. Right now, we have NASDAQ futures down 0.3%, Dow futures down 0.4%, S&P futures down 0.2%. We have the two-year yield 4.05%. That's up 1 basis point. The yield on the 10-year 4.23%, and that's up 2 basis points. To commodities, we have Brent crude $74 a barrel, WTI crude $70 a barrel. We have spot gold lower at $2,748 an ounce. Shares of Texas Instruments, well, they're up more than 2%. That's after an earnings beat. Its CEO also said the timing is right for an order recovery. And then a few companies making news. You have Apple CEO Tim Cook. He said the company's going to keep investing in China. Now, he made those comments during a meeting with Beijing's top technology official over in China. And finally, ARM ending a license that allowed Qualcomm to use its IP to design chips, and that's really going to escalate a big legal dispute. Qualcomm shares down more than 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Paul and I are doing everything we can to get away from the humdrum election, polling, tit for tat, who's doing what. You can watch 8 p.m. cable TV for that. Let us dig into the tariff debate. Ernie Tedeschi, first of all, Ernie came out of the Stanford Combine. He's, of course, been at the White House CEA, and he's written an incredibly historic treatment on tariffs. Ernie, first of all, did you study with John Taylor? Like, when you went into Stanford, did you have to sit there in a lecture hall with John Taylor dressed up like a raisin?
I missed out. I demanded my tuition back. I was there when John Taylor was on sabbatical.
There you go.
My econ 1 was taught by somebody else, unfortunately.
When you look at the foundations of economics, you look at history, and you have nailed it with your Bloomberg Opinion piece. Right now, the average tariff is 2.5%. I would think most Americans think it's higher. We could go back to World War II, 1899, or dare I say, to the shocking tariffs of about 1820. What are Harris and Trump going to do?
So I think Harris is going to basically keep business as usual right now, very much like Biden has done. Biden kept the Trump tariffs, increased a few of them, but basically rearranged some of the tariffs mainly on national security grounds. What Trump has done or has proposed, and what we looked at in our Budget Lab report, that was the basis of my Bloomberg Opinion column, is he's proposed, a bunch of different expansion ideas for tariffs, and they've been all over the place. And so what we did in our report was we listened to his remarks over the course of the campaign, and we tried to piece together 12 different scenarios that captured the spirit of what President Trump has talked about. And we created a range of different proposals. On the low end, 10% on all countries, 60% on China, but exempting all countries with which the United States currently has a free trade agreement. And on the high end, 20% on all countries, 60% on China, and 200% on Mexico. So that gave us a bookend of ranges for different ideas.
So, Ernie, what do the textbooks tell us that tariffs are designed to do? And then the question is, do they work?
Yeah. So the textbook tells us that tariffs are designed to protect domestic industry from outside influence and to let domestic industry grow. I think that there has been this sort of historic argument that tariffs were good when America was young, like in the 1800s. And that was sort of accepted wisdom. I will say that over the last 20 years, there's been more and more challenges to that accepted wisdom. You've seen more and more historic American economic research that says that America grew in the 1800s despite our really high tariffs. Tariffs in the 1800s were upwards of 40 or 50% in average effective rates back then. But that was sort of the rationale. But then the textbook tells you that as as your country matures, as its domestic industry becomes more competitive with global markets, the advantages of having having inputs and capital and labor, compete on an even playing field in a global market outweigh the protectionism of throwing up protectionist tariffs on your border. What we have, the evidence of what we have seen is that, tariffs nowadays, don't work as advertised in terms of creating jobs. And that doesn't mean that if you throw up a tariff, we're not saying that in no cases, no jobs are created. What we're saying is that net, the bad outweigh the good. Exactly that the cost to factories of increased parts coming in, for laying off workers outweighs any factory that creates a job.
Okay, Ernie, because of time, I want to cut to the chase here. President Trump, in his conversation with John Micklethwait of Bloomberg News, was adamant that he's talking about a magnitude of tariffs that will create a jump condition of labor formation in America. I don't want to go politics on this. I want to go, is there any history taught at Stanford or Berkeley is Barry Eichengreen or Brad DeLong going to tell me that if I get a magnitude tariff leap, I will create American jobs? Is there any evidence?
No. What we found in this report is the magnitude of tariffs that President Trump has proposed means, number one, higher prices, on the order of 1.5% to 5% for consumers. So that's $2,000 to $7,600 for consumers. So that creates hard choices for consumers. They're going to have to substitute to
but will it
goods
create? Is there any evidence? Is there any evidence that it will create jobs in America? My problem, and I'm thinking of William Klein at the Peterson Institute, is definitive on this. Paul, it's real simple. They're going to raise tariffs to go after Mexico, so the jobs are going to move to Vietnam.
I know. I don't know how that plays out. I don't have, but so.
No.
And Ernie, probably the other thing we hear probably most often, and I don't know if this is true, are tariffs a tax on the U.S. consumer?
That's right. No, there's probably nothing else more studied in trade literature than who bears the burden of tariffs, and it's very clear. It's the U.S. consumer and businesses that pay the tariffs in the end. So it's not the other country. U.S. consumers pay it at the end of the day, and so that's what U.S. consumers need to weigh. When they hear this rhetoric about consumers, is that they're going to end up paying it at the end of the day, and it's net. It's not going to create jobs.
Okay, huge clarity. Ernie, thank you so much. Ernie Tedeschi, the Yale Budget Lab. I think that's a school up in, they play Harvard in football in a couple of weeks.
Exactly.
The Yale Budget Lab, but Ernie working at the White House and with his economics out of Stanford and Berkeley on policy as well. Just some clear talk there, folks, whatever your political beliefs on tariffs. I mean, that's what Paul and I are working for every day here, is just trying to even up. Paul, I got futures negative 14. I don't know, what's Boeing doing? Help me out here. Sai, help me out. I can't keep track of all these stocks.
Talk about it. But I think it feels like a stock's kind of flat here, off about 0.8% here today. But I think the cash flow number was the big number coming out of Boeing, because they're bleeding cash because of this strike, shutting down production of their 737
And this is the second vote.
Yes, so we have a vote today, Tom, and again, the leadership has approved, the labor leadership has approved this deal, but now it goes to the rank and file. Now, just I guess a month or so ago, this rank and file rejected a first deal that the leadership had supported. So we'll see what they do here, but it's really in everybody's best interest to get back to work, because Boeing is bleeding cash. It's now been more than a month that these folks have been on strike, so it's got to be hitting their personal wallets pretty substantially. So hopefully they can come to some agreement here.
Bond market moving, particularly on an international basis. The U.S. 10-year now up 3 basis points, 4.24%. Japanese 40-year bond craters here, price down, yield up. A huge move there. Excuse me. You see it in yen with a 153 handle on yen, 1.3% weaker. Japan in a bond rout. Stay with us from New York City worldwide, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a lower open. This as investors pull back on bets on rapid policy easing. Now, most federal officials speaking early this week, they said that they favor a slower pace of rate cuts. You had Bank of America CEO Brian Moynihan urging the Fed to not go too hard on rates. All right, on the economic calendar for today, we have a read on existing home sales. That comes out at 10 a.m. Wall Street time. We have NASDAQ futures down 0.3%, 63 points. Dow futures down 0.5%, 224 points. S&P futures down 0.2%, or 14 points. The two-year yield, 4.05%. That's up 1 basis point. The yield on the 10-year, 4.24%, and that's up 3 basis points. To commodities, we have Brent crude, $74 a barrel. WTI crude, $70 a barrel. We have spot gold at $2,000. $743 an ounce. Shares of Deutsche Bank down nearly 3% in Germany. Traders reported a beat, but its bad debt rose, doubling from a year earlier. Then you have Heineken, those shares up 2% in Amsterdam. It had volume declines in key markets, but here's the thing, it was offset by higher pricing. And finally, Volvo Car lowered its full-year retail sales forecast. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Economic indicators, a little light today, but busy week coming up. Always brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support in technology. This is the most important interview of the day. Look in the mirror tomorrow morning and say, hey, where am I with my wealth creation? In the trenches. Alicia Manel, the giant at Boston College, announcing her retirement. We're efforting Dr. Manel to have her on. Just a huge victory lap for all of her retirement work. Pulling the short straw for Jane Fraser at Citigroup was Kristen Bitterly. They said, Kristen, go out there to professional organizations and help them try to get to retirement. Kristen Bitterly had a wealth at work at Citigroup. How bad is it? You walk into a fancy law firm, they're hiring Citigroup. What percentage of partners, associates, what percentage are behind the 8 ball?
Well, I would say the good news is that we have been covering law firms for over 55 years. So we're celebrating our 55th anniversary just in a couple of weeks. And so we have long history working with over 900 firms, many of the AmLaw 200 firms. And so I think where we're involved, the strategy has always been we're following people through their career journey, starting from entry-level associates through to senior partners.
Yeah, but how many are behind right now? Alicia Manel would say, Roger Ferguson would say, we've completely screwed this up. How many fancy people at fancy law firms are behind the 8 ball?
I'm going to offer another angle on this. I would say not behind, but I think what happens is we don't teach financial literacy in this country. So what we see very commonly, whether it's at law firms, whether it's at corporations, whether it's at professional services firms, you're someone who's been focused so much on your career, so much on your family, and then you basically find yourself in a situation where you have all of your savings in a savings account and you're underinvested. So the question there is, it's never too late to start, but the first thing you have to start with is making sure that, 1, do I have the right estate plan in place? Only 1 out of 3 Americans have a will in place. And 2, do I have a financial plan? Only 1 out of 3 Americans have a financial plan in place. So when you combine that, Tom, with your question around, okay, retirement assets, you have around 67% of Americans with some type of retirement asset. However, only 30% feel prepared. So there's a big
70% of America, 70% of Sullivan and Cromwell, I'm just picking on them. I mean, Paul, it's amazing.
I know.
It's like the national topic.
It is a big topic. So where do you start? If you have your initial meeting with a client, where do you start?
So you have to meet them where they're at in their journey, first of all, and it's never too soon to start. So the reason why a lot of people fail to plan is they think they're not wealthy enough, they're too busy. We could come up with all of the various excuses. And so early on in your career, it's really creating that financial plan to say, when can I be prepared to buy a house? How am I thinking about taking on debt to do that? A lot of purchases, this is another kind of shocking stat, 70% of purchases are emotional. People will go in and buy a home.
Or a Vespa.
Or a Vespa, yes, Tom, that too. I saw that photo. That was great. But I think, when you have that plan and you kind of then say, okay, where should I be investing? How should I be maximizing certain accounts? How can I take advantage of actually the structuring and planning? So we talk about financial literacy within this country, but we've also added a lot of complexity in the sense that...
Come on, okay. Orzag's over at Lazard now. When he was at Brookings, he said, look, we got to do an automatic buy-in on 401k. I mean, that's all there is to it. Are we getting anywhere nearer to where we approximate Paul Sweeney's ginormous multi-8-figure 401k?
I mean, look, I think one of the other data points that is important is I do think we're getting closer in the sense when you look at the boomer generation and you look at the anticipated wealth transfer that we're going to experience over the next 2 decades, it's anticipated it's going to be $90 trillion. over the next 20 years. So there is massive wealth creation and generation for those who are homeowners, for those who have exposure to the stock market. Clearly, there's been benefits within that. But I think the key thing for our clients is the unifying factor is they are busy professionals who are trying to make it in their career, and they're trying to take care of their families simultaneously. And sometimes what's best for you takes the backseat. So just taking that moment to come up with a plan and discipline, you will be way ahead of the game.
What are you telling your clients these days about where to go? Stocks, bonds, alternatives. I mean, the market's had a great year this year. Bonds have actually had a positive return. What are you telling them about these markets?
So the first thing is, I think when you're looking at what could drive markets, right now you could say the economy, you could say elections, you could say earnings, and geopolitics to a certain extent. I think there's a lot of people trying to trade around elections. Our advice is policy, not politics, is going to drive markets. So we are not making any significant portfolio changes on the back of that. I think there are, and I know a lot of people have been discussing this, there's always an excuse not to invest. There's always something to be worried about. But when you look at the tailwinds that we have right now, cash on the sidelines, $6.5 trillion. You have a Fed that, okay, whether it's another 25 basis points, 225 basis points, they are cutting rates. They're strengthening the consumer based on stock market prices, home prices. So I think there's actually a lot of positive tailwinds for risk assets.
Kristen Bitterly, with your experience at Citigroup, what's the level of exuberance right now? I am thunderstruck by the lack of taxi cab talk over what do I do with NVIDIA. I don't see, and there's some mathematics on this. Either. Yardeni and others have said, look, the exuberance just isn't there. When you go into a given institutional client to do wealth at work, are they foaming at the mouth to buy the Mag 7?
No, I think they're looking actually for much more balanced approaches to it. I
think will that balanced approach get it done?
So what I will say is it's better than not being invested. So
Fair.
The first step,
Fair.
Get invested, right? You could have a debate around passive versus active. It's first, being invested is better than not being invested. I think when it comes to the balance of conservative assets versus risk assets, you've seen a skew towards cash. With rates where they've been, massive skew towards cash. So that's another common conversation. Let's shift some of that risk profile.
David Balin was at Citigroup, and he aged. David Balin aged because everybody stayed in cash. He said, Tom, I'm pulling my hair out. I mean, how do we get from where we are to optimism, to enthusiasm about owning a balanced SPX portfolio, even away from Microsoft?
I think you have to get away from the market timing conversation. You and I have talked about this, and it is something that market people believe. Just like I said, there's always a reason not to invest. There's always a reason that there could be a risk. It feels good to stay in cash on the sidelines. But look, if you stayed in cash on the sidelines year to date and you miss this 20% plus rally within equities, you are significantly underperforming. I think another thing that is actually a really positive, we talk about this all the time, longevity. People are living longer. The population over 80 is expected to triple. The population over 65 is expected to double. What does that mean in terms of how your money has to work for you? It has to work longer. So it's not just about risk assets, it's actually about, and your previous guest spoke about this, alternatives as well.
Yep.
You need those assets to work harder for you.
That's why I'm still working. How about you go to some of your associates at some of these law firms? I'm guessing they have a lot of debt that maybe we didn't have from education. That's got to make it tough on the younger folks.
I think it makes it tough on younger folks in all industries. And so you have to look at your balance sheet analysis. And I'm bringing this full circle to planning, looking at looking at the interest rate on that debt. Not all debt is bad, right? So, I mean, if you were someone who locked in one of those 30-rate fixed mortgages, you won the lottery. So looking at debt not as necessarily bad in and of itself, but in terms of high rate, low rate, and trying to optimize your balance sheet, and then finding liquidity for where you can invest and where you can make those important investments for your family as well, such as owning your home.
I mean, I got to look back here. Notre Dame beat Purdue 66-7.
They're good.
I thought it was a fluke because Purdue is a powerhouse this year. I don't think there's any other football team other than the Notre Dame's, Kristen Bitterly, that have won as big as they've won this year. They're ranked 12th in the country, but they're ginormous.
We had an unfortunate loss early on in our season, which was a little heartbreaking. But I'm an avid Notre Dame fan, and I'm going to be an optimist here.
I've never met a Notre Dame
Northern Illinois.
Northern Illinois. It happened our second game, Tom. It was after beating Texas A&M.
So after that was shots of tequila, right?
Mezcal for me, but yes.
Okay.
Yes.
I mean, the work you're doing, this is God's work, folks. I mean, this is really serious stuff. Listen to Roger Ferguson, the former vice chairman, TIAA-CREF. I mean, I'm sorry. This is the most important interview of the day. The percentage of Americans cratering in retirement and financial planning is off the chart. Kristen Bitterly with Jane Fraser at Citigroup Wealth at Work. Kristen, thank you. So what do you think, Paul? Florida State? You know, they got they the powerhouse. Navy.
Coming up. What?
Notre Dame Navy.
Navy and Army are very good.
Navy's top 20, Rich?
Yeah.
Thank you.
It's here in New York.
Oh, top 25.
Oh, very
okay.
good.
Oh, very
Got the
good.
box,
We're
I'm
learning.
sure.
Michael Barr's going, it's my time. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. 13 days are left before Election Day. Former President Donald Trump was back in North Carolina for a second day in a row at a rally in Greensboro last night.
As your president, the American dream, we're going to bring it back. Our country is being crippled and destroyed by Kamala Harris.
Former President Obama in Madison, Wisconsin, campaigned for the Harris-Walz ticket.
Do not think this is a distraction or a joke. Get off your couch and do what?
Meanwhile, former President Trump's longest-serving chief of staff says that his former boss, if elected, would rule like a dictator. Retired Marine General John Kelly tells the New York Times that, based on his experience, Trump meets the definition of a fascist. The Trump campaign dismissed Kelly's comments. McDonald's faces a deadly E. coli outbreak. One person is dead, dozens of others sick, including at least 10 in the hospital with bacteria that may be tied to the onions in its quarter-pounder cheeseburgers. Bloomberg Intelligence restaurant analyst Michael Halen says it's the biggest fast food outbreak since the Chipotle E. coli and norovirus scare in 2015, but that was more complicated.
Their food is out in the open behind a sneeze glass, right? And so there's more opportunities for pathogens to get into the food make line. Whereas, McDonald's, we think this could be an easier solve. If you just start grilling your onions, that would take a lot of the risk out of the situation for them.
Michael Halen with Bloomberg Intelligence. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. He's been incredibly busy this morning. You hired this guy. Michael Halen is definitive. He was at Citi. And he covers the fast foods. And as Michael Barr just said, it's been since the Chipotle uproar that we see this. He'll be with us in 3 minutes.
Yeah, he'll be with us, and he covers all the restaurant companies, so he's got a lot of experience with this. I said before, I'm kind of surprised, pleasantly surprised, that this doesn't happen more often. Just think about all the fast food places out there and how much people are all out and about, but we'll see. We'll see how quickly McDonald's can deal with it.
Good morning across the nation, and Apple CarPlay, Android Auto, particularly good morning in the vicinity of Omaha, Nebraska. This is serious stuff this morning with McDonald's. We'll dive into this here in a couple minutes with Michael Halen of Bloomberg Intelligence, just definitive on processes of large restaurants, as Paul mentioned, centering on beef and onions. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling. The thought of less aggressive Federal Reserve interest rate cuts continue to weigh in the markets. Right now, NASDAQ futures down 0.4%, 81 points. Dow futures down 0.5%, 228 points. S&P futures down 0.3%, or 18 points. We have the 2-year yield at 4.05%. That's up 1 basis point. The yield on the 10-year 4.24%, and that's up 3 basis points. To currencies, we have the dollar stronger. Japanese yen down more than 1% at 153.07 against the dollar. Euro, British pound weaker. We have Bitcoin down 1.5% at around 66,000. Shares of Spirit Airlines up 28%. There's a report from the Wall Street Journal that Frontier Airlines is exploring a renewed bid for Spirit. And American Airlines, they've agreed to pay a $50 million civil penalty over claims that it violated rules protecting passengers with disabilities. And this last one stood out to me. New York City workers might get paid sick leave to care for their pets. Yeah, the New York Times saying a councilman introducing the pet care bill, saying it keeps our pets healthy, and that keeps us healthy. That is your Bloomberg Business Flash. Tom and Paul.
Yeah, this was mentioned last night at home. I mean, vet Bill sat up straight and said... This sounds good. Mm-hmm. Little care and affection. Lisa Mateo, thank you so much. Futures negative 18, Dow futures negative 227, and now we do some microbiology and restaurant process with a former member of the Georgetown Hoyas football team.
Oh, really? Nice.
Yeah, this is good. Why don't you
It
bring
looks
in?
like a football player.
Did you hire this guy? Is it your
did.
fault?
It's my fault. What can I tell you?
Good.
What can I tell you? He's one of our good ones. Mike Halen, he's a senior restaurant analyst for Bloomberg Intelligence. Mike, pretty much everybody in our audience has been to a McDonald's, maybe not Lisa Mateo. Stock down 6.7% today on the news of this E. coli breakout. What does it mean for a company the size and the scope of a McDonald's?
Boy, it's Saxa.
Yeah.
Yeah, it's a bad situation, right? This is pretty much the worst thing that can happen to a restaurant chain. Unfortunately, somebody has passed away. They had another 10 people in the hospital. This could extend to even more incidences, unfortunately. I think it means it's going to be in the penalty box for a while, both with consumers as well as investors, right? I think, with all the bad press they're going to get over this, it's going to definitely have an impact on sales and traffic. And, it could be about, we could see, top line pressured for about a year.
Wow.
Really here until it starts to lap, easier comps.
I mean, Paul Sweeney's our McDonald's expert. He moved French fries there years ago. You season a fresh beef patty with salt and pepper. And as Paul mentioned, 2 slices of American cheese, slivered onions, that's considered maybe one of the rarest, pickles, ketchup, mustard, serve on a sesame seed bun. They do that every single day. Paul mentioned this earlier. It's a miracle we're not talking about this more often. Why aren't we talking about this more often?
Yeah, well, Paul and Donald Trump slinging fries at McDonald's. I love it.
Exactly.
I think it depends on the chain, right? So McDonald's, a lot of the stuff goes through the grill, and there's been chains like Jack in the Box, decades ago had a horrible E. coli outbreak where I think a number of people had died, and so the quick service industry had gotten a lot better about making sure they're cooking their burgers well enough to kill any potential pathogens. And yeah, this one's unique. I mean, onions, usually when we hear E. coli, a lot of times it's lettuce, it's spinach. That's what it was for Chipotle. Slivered onions, but I think this is an easier fix than Chipotle had, right? Because if you decide to grill your onions, then you can kill the bacteria due to the heat, right? Whereas Chipotle was a kind of a unique situation that stretched out about 5 quarters. There was a bunch of other issues after E. coli. Norovirus was breaking out at several stores, and it's just harder to correct at Chipotle because it was a open, food was out in the open behind a sneeze glass, right? So I think this is an easier fix for McDonald's. I don't think it's going to be something that continues to pop up. I don't think it's going to be something that's as long lasting as Chipotle, but bad headlines are going to remain in consumers' mind for a little while here.
Paul, this is an anecdote, and I got to leave the names out of it because it was a private conversation. I talked to a guy who's in damage control.
Mm-hmm.
And he handled Chipotle and he walked away because they wouldn't listen to the pros. So, Paul, that's the question. What's McDonald's doing this morning about damage?
Yep, the Harvard case on damage control, I think, was the Tylenol and how well they reacted to that issue, which was a really serious issue. Hey, Mike, I guess what we've seen from some recent sandwich chains out there is kind of like slicing the meat right in front of you, making the sandwich right in front of you, all that kind of stuff. Do those kinds of situations, which presumably go to the freshness, and they try to sell the freshness aspect of it, does that create more risk versus, say, a McDonald's, which just throws everything on a grill and cooks it up?
Yeah, it definitely does, without a doubt. I think your safest bet is something like a Domino's, where everything goes through an oven that's, I don't know, 600, 700, 800 degrees, right? I think, the healthier stuff, though, without a doubt, is definitely riskier, and it's also harder to trace. So once there is an outbreak, a lot of times these organic suppliers or fresh suppliers, there's not a big enough suppliers, right? And so a lot of, like, say, a Sweetgreen is getting lettuce and spinach from all over the country, and it makes it harder to find the source of the problem.
Yeah.
Right. And so, I think McDonald's,
right,
in terms of operations, is very heavily dialed in. It sounds like they've really pinpointed where the problem came from and have kind of shut down.
Michael, they've done 15.6% per year for the last 10 years. They're virtually Mag 7 like here. Do you have to change? I don't want you to do buy, hold, sell, because I know you don't do that. But do you have to change the Excel spreadsheet this morning for McDonald's looking out 3 years or 5 years?
Yeah, you do, and it's and the reason why is because everything flows off of this year. So that I think the next 12 months we could see same store sales declines, right? And then as that feeds through, that's going to impact results down the line. I think, like I said, I think this will bounce back faster than Chipotle. I think, they could bounce back, even maybe late into 2025 into 2026. But yeah, the most recent earnings are going to flow through the rest of the model, so it's going to impact them. But in terms of the brand long term, I think this management team does a good job generally. Price, they've gotten a little ahead of themselves with price, but most QSR has. Am I concerned about the long-term health of McDonald's over the next 3 to 5 years? No, not really.
How about Starbucks? That's another name you cover, Mike. The withdrawing guidance, that kind of. Is it just gotten too expensive for Lisa Mateo and her spicy latte, whatever she gets?
Pumpkin latte.
Whatever.
That's part of it, but I think a bigger part of it is the experience, right? They've got so many new items to try to drive sales. And then at the same time, we're doing all these throughput initiatives. Like, you can't have one with the other. It doesn't make any sense. You can't have your cake and eat it too in that aspect. So it just became really difficult to operate, right? And then on top of it, you had all these digital orders coming in, right? And so they lost that cafe feel. Like, Starbucks became popular because the baristas were happy. They knew your name, right? And it was a great experience. And they've completely lost that, to Brian Nichols' point. It's become more transactional. And so I think the experience is just as important as the price there. I'm not too concerned about the retraction of guidance. I mean, any smart CEO is going to do that when he first enters, right? And Laxman, unfortunately for him, didn't get that chance when Howard issued new long-term guidance right before hiring him. But I don't think Brian Nichols' concerned. This report was no surprise to us. We've been negative for a year on Starbucks, and the last 2 quarters have been an abomination. So the continuation of that really didn't shock
Michael
us.
Halen, we're really huge hitters here at Surveillance. There's a McDonald's on 3rd Avenue right around the corner. Next time you're in town, on Surveillance, McDonald's.
Sure, absolutely.
In recovery. Michael Halen, Bloomberg Intelligence as well. Fernando Valenzuela took the nation by storm in 1981. So did the Stones.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news. Tensions between the U.S. and China have heated up even more. The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Bonjour tout le monde. How was that for French?
Very nice.
It's like a Paris, not a Montreal.
there for a week.
Francis Donald with us. We're going to get to a discussion with RBC Capital's chief economist. We'll do that in a moment. Paul Sweeney, Tom Keene, Lisa Mateo in as well. We say good morning to all of you. A really interesting conversation moments ago on this horrific McDonald's Escherichia coli illness, one dead and others injured. And, you know, live chat on YouTube has been brilliant on this. We go to surveillance vegetable correspondent Lisa Mateo. Seriously, Lisa, do you wash your vegetables? How do you do that?
You have to, especially the fruit. You soak them in vinegar and water for a little bit first.
Really?
And then,
vinegar?
Yeah, vinegar and water, and then you let them sit
what do
for
you
a
do
little
with
bit.
lettuce?
Lettuce, usually they come pre-washed in the bag, so I just kind of go with it there.
Okay, thank you.
Yes, vinegar and water.
News you can use this morning.
But no soda in that household.
Yeah, well, I know. No Coca-Cola. Coca-Cola out with earnings, and something to talk to Francis Donald about. It was all price generated with unit volume really not all that good. Maybe we'll lead with that here in a moment. Futures at negative 20. That's all there is to it. Bond market, important global bond route. That's what Bloomberg calls it. They're right. In foreign exchange, yen 153. Yen clobbered over the last 2 days with new DXY dollar strength. DXY out to 104.47 for Global Wall Street out there. We're out on YouTube. Subscribe to Bloomberg Podcasts on your commute, Apple CarPlay, Android Auto. Good morning on Sirius XM as well, 99.1 FM Washington, Bloomberg 1130 New York, and 92.9 FM. In Boston. You want to jump, I can tell you want to jump in here. You got something going on.
I'm just thinking about this whole Montreal, Quebec City thing. It's just
we'll talk about it.
We'll get to our next guest on that.
We'll talk. All I know is Ray Bork. Okay. With our Bloomberg Business Flash from the Interactive Broker Studios, Lisa Mateo.
And we've got futures pointing to a lower open. A ton of companies set to open their books today. I want to start there because they're already coming in. We have Boeing down nearly 1%. Negative free cash flow, $2 billion in the quarter. CEO Kelly Ortberg said among the most immediate tasks at hand, that is ending that weeks-long machinist strike. Workers are expected to vote later tonight on whether to ratify that contract offer, so we shall see what happens with that. AT&T, their shares up more than 2%, gained more mobile subscribers in the third quarter than was expected. And then you have Coca-Cola, raises outlook, consumers continue to pay higher prices. And Hilton, their shares down 2%, lowered its profit outlook. After the bell, we have Tesla, IBM, T-Mobile, so a busy day on tap for today. Right now, NASDAQ futures down 0.4%, Dow futures down 0.5%, S&P futures down 0.3%. The 2-year yield 4.05%. That's up 1 basis point. The yield on the 10-year 4.24%, and that's up 2 basis points. Heading over to commodities, we have Brent crude $74 a barrel, WTI crude $70 a barrel. We have Brent crude $2,740 an ounce. McDonald's shares, they're still down 6% after that E. coli outbreak tied to its quarter pounders, and then you have Starbucks down more than 3% after pulling guidance for 2025. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Joining us now, Francis Donald, Chief Economist, RBC, the Royal Bank of Canada, and just outstanding work on the equation that is gross domestic product. I'm fascinated by the Coca-Cola earnings, where they basically had no unit growth, and it seemed like good organic revenue growth was all pricing power. Mm-hmm. Is pricing power going to evaporate as nominal GDP evaporates?
Pricing power is already becoming more difficult, and that's because the general state of the consumer is becoming more difficult, and most importantly, the general state of the low and middle income consumers is becoming more difficult. Very little excess savings left, much less real wage growth, especially because that group is spending more on the higher inflation areas like food and energy, and those low and middle income households just haven't had that boom coming from stock market gains. They have less than 5% of their portfolio there. So back 2 years ago, you could have pricing power because there was money to go through. That money is evaporating, and the spread between the haves and the have-nots is becoming much larger. Depending on what you sell and to who, that's either good news or bad news.
Well, the federal government seems to be responding. They're cutting interest rates from a fiscal perspective. Lots of spending plans out there from the government. Is that enough to sustain, to lift this economy, including, I know you're bringing back the K-shaped economy discussion for the folks that have not been participating. Is that enough to help those folks, do you think?
Well, it depends where it goes. And I can't believe we don't talk every single day about federal spending. It has been so extraordinarily disruptive to every single economic model that exists, and it has changed the way that we have to evaluate the cycle. But problematically, we see these deficits rise and spending increase, but net interest spending is now larger than defense spending. And if we're spending government money and it's going to pay treasury holders outside of the United States, that's not helping everyday Americans. It's not boosting growth, and it's not actually inflationary either. So it isn't just about the amount of government spending, which is just chaotic in terms of how it's changing the way the economy operates. It's where it's going. And defense, net interest spending, even entitlements is not going to be the juice that fuels this extended, continuous, resilient aggregate economy.
I agree with the concern about the federal debts and deficits and all that, but a lot of folks will come back to me and say, hey, interest rates are still relatively low. People are buying our debt like crazy. Don't worry about it.
Well, I don't worry about it so much from the, there's going to be a bond market collapse moment. I mean, the risk of that just empirically has to be higher now than it was when we didn't have near record levels of debt to GDP. What concerns me is that at a certain point, we're going to hit up against limits. And if the main support, the main pillar that is driving the so-called soft landing is government spending, sometime in the next 4 years, we're going to have to take a step back. And if the Fed is not focusing on this and the fact that they actually probably can't keep rates super high, it will lower future government spending, then I would be really surprised.
But are they too data dependent? You and I shared a stage in, I think it was Toronto, I can't remember. But, you know, the bottom line, Francis Donald, is we're addicted to the parlor game. We're addicted to data dependency. And all I can say, Paul, that hasn't worked out.
No, it hasn't
What's
worked out.
a new approach?
We cannot be month-to-month data dependent, and I know the market runs off of this, but there's a couple reasons why. First, we have huge election uncertainty. It has paused business decision. We see this in surveys, small business surveys, ISM manufacturing. Companies are saying, we're just holding off, so that's a pause. We have really low response rates on a range of our economic data, and then related, we have sizable revisions. So we're seeing these sizable market moves, perhaps even policy decisions that are coming off of month-to-month movement. We are in the dark, or at least the moment of the day where the dusk comes in. We cannot see fully. So the Federal Reserve is going to have to focus on that 6 to 12 month view. And what they're likely seeing is the unemployment rate has been creeping higher since January of 2023. Inflation looks relatively contained. Inflation expectations are all right. Low income, medium income consumers expressing concern about the labor market. They have to calibrate policy back to that more neutral level. And I hope they're not looking at month-to-month data and that they're looking more at 3 to 6 month trends. If they are, it's a continued easing cycle, at least down to 4%, maybe beyond that towards 3.
What's your view of the U.S. economy here? Is it resilient, or do we really still have to think about a recession?
Can I be bold and ask which U.S. economy? Because I'm having trouble just thinking about one U.S. economy right now. If I aggregate all of the parts, real difficult to get 2 quarters of negative GDP, in part because of how much government spending is coming through. So I can't be in the recession camp because that's not formally a recession. But if I look at manufacturing has been contracting in the U.S. since 2018. Industrial production is smaller. Existing home sales are 30% below where they were before COVID. They're at the level they were in the Great Financial Crisis. Small businesses who employ 80% of the population are the most negative they've been since the Great Financial Crisis. So on aggregate, things look good, supported by a really strong high income and CEOs, but the rest of the economy is dicier.
Francis, we don't care All we care is that the Rangers scored with 54 seconds and that Brzezinski scored at 2:05. They clocked years in my Montreal Canadiens 7-2. It's another difficult year, isn't it? It's a rebuilding year.
A rebuilding year is a good way to think about it. I would agree with you, Tom.
You should see the RBC tickets at the Forum.
Oh, fantastic.
That's why she went to RBC.
Yeah,
I couldn't possibly comment.
Francis, thank you so much. With RBC, I can't say enough about her research. Get that from the Royal Bank of Canada, RBC Capital Markets. We protect the copyright of all of our guests, even Francis Donald. The Canadians are sort of like the Lions used to be.
Used to be.
Yeah, with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. With 13 days to go before the election, former White House Chief of Staff John Kelly is openly criticizing his former boss, Donald Trump, calling him a fascist. The retired Marine general is adamant, telling the New York Times he heard what he heard from Trump.
He commented more than once that, that Hitler did some good things, too.
Kelly went on to echo what former Joint Chiefs Chairman Mark Milley told author Bob Woodward, that Trump meets the definition of a fascist. Trump's campaign says that Kelly has, quote, totally beclowned himself. The Georgia Supreme Court rejected a last-minute push by the Republican Party to reinstate a set of new election rules that included, among other things, a requirement that ballots be hand-counted in the upcoming U.S. presidential vote. The Republican National Committee challenged a lower court's decision last week to strike down the rules as unlawful. Scott Turner, founder of the nonprofit Eternal Vigilance Action.
That collective sigh of relief you heard was from our election officials around the state.
The court's decision means the rules will remain blocked at least heading into the November 5th election. Secretary of State Antony Blinken says Israel needs to pursue an enduring strategic success after its tactical victories against Hamas. Today, speaking in Tel Aviv, Blinken believes the goal for Israel's end to the war includes the death of the Hamas founder, Yahya Sinwar.
And there are really two things left to do. Get the hostages home and bring the war to an end with an understanding of what will follow.
Secretary Blinken spoke before traveling from Israel to Saudi Arabia on his 11th visit to the region since the outbreak of the war. Defense Secretary Lloyd Austin says that the U.S. has evidence that North Korea has sent military forces to Russia. Ukraine and South Korea have repeatedly accused North Korea of sending troops to Russia to help in the war against Kyiv. Austin made his comments before departing Rome. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, what have you learned about earnings so far? I mean, we're not halfway through.
No, I don't think so. I'll take a look soon. But the big banks last week were really strong across the board. Pretty
Agreed.
Impressive there, and I think we've seen the banks rally there. We're starting to see. We talked to Gina Martin Adams. I was looking at pieces for research here. The companies are beating estimates as they tend to do here because they set the bars low and they try to outperform.
No.
So we're seeing that again this quarter so far. It'll be interesting. I think tech, Tom, is going to be
a
really
week from
important.
today, Microsoft.
Exactly.
8 days,
Yep.
Apple.
Yep. And I think you
They're
still
terrible.
need those. Yeah, exactly.
It's terrible.
You still need those to lead, I think.
I got an email. I have a hat trick. Do you know what I have a hat trick of?
No.
iPhone 16s.
Oh, yeah.
A hat trick. All of a sudden. It's amazing. I dropped my phone. What do I do?
Yep. They took.
What a racket.
I got a nice rebate on my one I turned in. My cash out of the pocket was almost zero to upgrade.
Seriously?
Yes.
That's the racket. That's the racket.
Yep.
I'm making the number up, folks. Stay with me. 85% of iPhones are purchased, just like Paul Sweeney did, monthly and that.
Yep.
Bloomberg surveillance. Stay with us.
24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And the Bloomberg Futures Report is brought to you by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group Futures across equity indices, interest rates, FX, energy, and more. Access CME Futures around the clock at Interactive Brokers. All right, we've got red on the screen with NASDAQ Futures down 0.4%, 99 points. Dow Futures down 0.6%, 257 points. And we have S&P Futures down 0.3%, 22 points. We have the 2-year yield 3.05%. That's up 1 basis point. The yield on the 10-year 4.24%, and that's up 3 basis points. Two currencies, we have the dollar stronger. Japanese yen down 1% at 152.96 against the dollar. Euro, British pound weaker. We have Bitcoin down about 1.5% and around 66,000. Shares of Texas Instruments, they're up more than 2%. There was an earnings beat. Its CEO said the timing is right for an order recovery. And a few companies making news. Apple, the information reporting it's sharply scaling back production of its Vision Pro mixed reality headset since the early summer, and it actually could stop making the existing version entirely by year end. And finally, UK-based ARM Holdings canceling a license that allowed its longtime partner Qualcomm to use its IP to design chips. Those Qualcomm shares down more than 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Paul, you've been on this. You've absolutely nailed this. We talked to Governor Ned Lamont of Connecticut recently. His new headache is drought. It is tangible. It is real. With the death of a Wethersfield fireman, I believe in the last 2 days here, Lamentation Mountain, Berlin, Connecticut. This is in California, where they're used to this full time. Yep. All of a sudden, it's tangible along the corridor here from 99.1 up to 92.9 FM Boston.
Yeah, we've been talking about this great kind of late summer, early fall weather we've been having around the tri-state area.
Price.
It's beautiful. Yeah, I was on the beach yesterday in the ocean, still a great beach day. In late October, that's not right. So
thank you to first responders looking at those really difficult drought conditions in the Northeast. This is a pleasure. David Kelly joins, Chief Global Strategist at JP Morgan Asset Management with decades of experience. David, 18 months ago, you established a responsible vector that we would see non-farm payrolls come down, various employment statistics, and the emotion of maybe a negative non-farm payrolls. We didn't get there, but can we revisit this and say we're in the process of worser labor statistics?
Well, the problem, Tom, is you've got a very good memory for bad forecasts. There was always a risk that we would see a negative employment number because really we've seen a great deal of volatility in payrolls. And so 18 months ago, we did see some weakness. We still never thought, we didn't quite call for a recession last year. We're still not calling for a recession right now. And we could, the payroll report we get at the end of next week, that's going to be volatile because of weather issues also. But to me, the most important thing is that next week we're going to publish a GDP number of about 3%, or maybe more than 3% in annualized growth in the third quarter, following a quarter of 3% growth annualized in the second quarter. And that tells me the economy's got plenty of momentum. And so on average, it should still generate positive payroll growth. So I'm a little bit more optimistic than that old headline would suggest.
This is what I love about the show, Paul. The Class X, they come out. It's a tough business. You got to make a call. And David made a call. And as far as I'm concerned, out the x-axis, he's going to be right at some point. But this 3% GDP, no one saw this coming.
No one saw this coming. So, David, let's think about this. I mean, when JP Morgan Asset Management, nobody more global than you guys.
Yep.
Where do you see kind of the best opportunities here? When you sit down with your clients and you sit down with your portfolio managers, where are you seeing the best opportunities globally here?
Well, I think this is a time when people all need to think about protection of the downside, and it's not because of any concern about the economy, global economy, or the U.S. economy. I mean, the global economy is mixed. The U.S. economy is doing pretty well, but valuations are very high. So, I think the opportunity is in diversifying into areas that are not overly expensive right now. But really, that is more. It's not so much about finding another way to goose up returns, which honestly have been great. It's really a way of protecting portfolios at this stage by making sure you're not too concentrated after such an extraordinary bull market over the last 2 years.
what do we need out there to sustain this bull market? I've got a Federal Reserve that is cutting rates. I'm not sure to what degree or how quickly. I think I've got a pretty decent earnings outlook here, at least here in the U.S. Is that enough to continue to push risk assets higher?
Not quite. I think we need a relatively benign outcome from the election because there is a danger. Obviously, there's greater potential for a Republican sweep than a Democratic sweep, but a sweep on either side would mean more aggressive fiscal policy, which could push up long-term interest rates. And we're already seeing that to some extent as former President Trump's polling numbers have improved slightly. We've seen long-term rates go up because there's the thought that if you have a Republican sweep, you're going to have a much more aggressive fiscal policy along with the trade war, which could push up higher, could cause higher inflation. So I think there is a danger of a policy mistake, not so much from the Federal Reserve, but from the federal government here. And that, I think, is a risk investors need to think about.
Why did we all get 3% GDP wrong? What if Y equals C plus I plus G plus net exports? What got us from 2.x out to a legitimate 6 months of 3% growth?
There are two things going on here. The most important is consumer spending. Consumer spending is 68% of demand. We think that it's going to go up by more than 3% in the third quarter, maybe 3.5%. Wow. And what's going on is two things. One, the wealthy are doing extremely well here. We've seen a $50.1 trillion increase in net worth in the last 5 years. Just explosive gains in wealth, both in terms of housing wealth and stock market wealth. And that is fueling the spending of upper income consumers. And second, we've actually seen some better real income gains for our lower and middle income households. We've seen just in the last month, we've seen average hourly earnings growth exceed CPI growth for the 17th straight month. So even though the public mood is pretty grumpy, actually lower middle income households are also seeing gains, and that's showing up in higher food spending and higher clothing spending in the retail sales report. So overall, the consumer still has got some fuel here, and that's the biggest thing. And then the other thing is just a lot of corporate spending on AI, which I think is helping investment spending overall.
So when you read Michael Feroli, which I know is torture, but when you read J.P. Morgan Economics, are they telling you it's a productivity overlay?
I read it very closely, but there's some productivity gains also going on. I don't think the productivity gains are really AI driven here, but if you look at the GDP numbers, productivity gains since the start of this decade have actually been better than last decade. So that's going well too. So, in the big aggregate numbers, the US economy is doing fine. 4.1 on the unemployment rate, 2.4 on CPI. That sums to 6.5, which they used to call the misery index, the sum of unemployment and inflation. But that's better than it's been 87% of the time over the last 50 years. So the economy is doing fine. I just worry that individual investors may be sort of caught offside here if they're overweight, the overpriced within these markets.
Sorry, Paul.
No, I was just going to say, that's exactly how I feel. It seems like things are generally pretty decent out there, but that's probably, Tom, to a reasonable level reflected in the markets.
And it folds right into the election.
Yeah.
Of an election of politics of haves and have-nots. Look to Kaylee Lyons and Joe Matthew for their coverage of that, heating up here in 3 hours. David Kelly, thank you so much with J.P. Morgan. Can't say enough about the bodywork. He has like 522 people under him. Every morning he wakes up and goes, who's in Denver?
Exactly. He's also a graduate of the University College in Dublin. I took a bike tour of the University College Dublin a few weeks ago. Beautiful.
Worked at Putnam years ago up in Boston with Bob Goodman. You know. He's just great. David Kelly, thank you so much with an update there on his labor call. Interesting to see that, he suggested they're modeling another 3% quarter, which is just stunning. 6 months of 3% GDP. Never did I see that in 2023.
Yeah.
Never. Not a chance. How are we doing here? We're at futures. We're going to get the market open. Negative 22, but it's really affected by McDonald's, Boeing. NASDAQ down 0.5%. I'll go with that as well. The VIX 18.75, currencies on the move. Substantial dollar strength this morning. Lisa Mateo, Michael Barr, Paul Sweeney, Tom Keene. We continue with the market open. Good conversation. Please stay with us on YouTube and on your commute across America. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this opening bell report is brought to you by BNY. BNY's expertise and insights can help clients achieve their ambitions. Visit BNY.com. All right, we've got a ton of company earnings investors to look through at the open. We've talked about AT&T, Boeing, Coca-Cola, Hilton. After the open, it's T-Mobile, IBM, and Tesla. So let's get to the numbers right now as we start to kick things off. Right now, we'll start with the S&P 500 down 0.3%, 18 points at 5,833. The Dow down 0.5%, 236 points at 42,693. And the NASDAQ down 0.3%, 66 points at 18,506. We have the two-year yield 4.06%. That's up 2 basis points. The yield on the 10-year 4.24%, and that's up 3 basis points. Commodities, we have Brent crude, $75 a barrel. WTI crude, $71 a barrel. We have spot gold down about 0.3% at 2,740. To currencies we go. Dollar stronger. Japanese yen down more than 1% at 152.93 against the dollar. Euro, British pound weaker. We have Bitcoin down more than 1.5% at around 66,000. At the open, checking in with a few companies. Boeing down 1%. Coca-Cola down more than 3%. And finally, AT&T down just about 1%. That is your Bloomberg opening bell report. Paul and Tom.
Great report, Lisa. Thank you so much. Coca-Cola, to me, Paul, is a huge deal here. To review that, when we started the show, unit growth doesn't exist. Yep. All pricing power, and people are going, when does that end?
Yeah.
Simple as that.
Exactly right. And the stock's down about 3.5%, Tom.
This is, what a joy to have George Patterson with us. He's with PGIM, and they gave him a fancy multi-syllable title, Quantitative Solutions. But with Jim Caron of Morgan Stanley, George Patterson presents us with physics like no one, with his work at MIT, his PhD from Boston University. George Patterson, when you were at BU, did you participate in the October physics pumpkin drop from the top of the Metcalf building?
Tom, very much. Thank you very much to be here. Yes, I have participated in that in the past. Unfortunately, that was almost a lifetime ago.
It was a lifetime ago. Now, they put different substances in the pumpkins. Did they put Narragansett lager beer in your pumpkin?
I can't say that I recall that far back.
Okay, George Patterson with us. It's a great thing. They dropped 70 feet off a building at BU. They put all sorts of substances. It's a learning experience.
It's a learning. It's a lab for the
it's a lab.
And across the river, they also had a piano drop where they would regularly drop a piano off of one of the dorms. I'm not sure if that's still allowed or not.
Great. George, are we having a piano drop in the global bond market? I got 40-year Japan really moving 0.5 yield to 2.5 yield. Does that correlate over to other price declines around the world?
Well, Tom, we're always thinking longer term, and a lot of these moves are very short term in nature, and we're really thinking about the long term drivers. So I'm not as concerned about some of the short term dynamics.
All right, so let's talk about just emerging markets in general, George. How are you approaching them these days? We've got a lot of central banks around the world cutting rates. How does that impact your emerging market world?
Well, emerging markets, if you think long term, and many of our clients at PGIM Quantitative Solutions really come to us because we think long term. If you think about where the opportunity is, the U.S. large cap is expensive. Doesn't mean it's not going to continue to deliver in one way, shape, or form, but you need to have a diversified portfolio. And really, the opportunity to find some undervalued stocks is in the emerging market space.
All right, so let's think emerging markets. And when we think emerging markets, I also think China is such a big part of the MSCI. What are your thoughts about the Chinese stimulus and where we are in that economy and where assets might be valued in China?
Yeah, China is one of the areas where when we talk about emerging markets is an area that many investors currently are just not comfortable investing in for a variety of reasons. But the stimulus measure is moving it in the right direction. But as we know from our time in the U.S., real estate takes time to clear. If you go back to the financial crisis here, you don't solve real estate problems overnight. So it seems like they're moving in the right direction. Obviously, the stock market in China thinks they're moving in the right direction. But I think we need to see if this is really borne out over time. Yeah. At the time, we're looking for opportunities more in India, other Asian areas where there's just a lot
Right.
of there's a lot more opportunity.
Okay, so I'm looking, Damien Sassar taught me how to do this. I'm looking at the Indonesia 10.5%, comes out 6 years, and it's yielding 6.7%, maybe something like that. And had a big boom 10 years ago, and now it's been incredibly range bound. Do you see George Patterson's stasis, stability within EM debt, or can you get a jump condition where somebody has a real opportunity?
Tom, my focus is a bit more on the equity side. So I think the EM debt is a great area, but on the equity side, what I'm focused in is areas where it's, there's a lot of growth potential. So for example, anything related to technology, semiconductors, software development that supports the overall growth in machine learning.
Yeah.
But where is that happening outside of the U.S., particularly in EM, where it's largely been overlooked?
Okay, but on an equity side, to flip it over, 30 years ago when you were dropping pumpkins at BU, the bottom line, George, is you bought the telephone company or the concrete maker. It's a lot more sophisticated now. For example, in Indonesia, how do you diversify away from those two ancient stalwarts?
Yeah, exactly. And this is the reason you need to have an active approach, and you really need to look across countries. So you can't put all your eggs in one basket in one particular country. The industry makeup of specific countries is just very different. So you need to find the areas that are a little bit more tech focused. For example, software in India. It's still extremely cost competitive. A lot of advantages to be captured by taking advantage of software development or other technology enhancements that all support and roll into longer term trends within the U.S.
Hey, George, I'm guessing emerging markets investors, one of the things they look at is who's running the U.S. government. How do you kind of frame that risk or opportunity out in your model? How does that get calculated in your model?
So this is something that is very hard. And when we talk about emerging markets, I think that's the reason when I talk about long term, because again, in the near term, there are some risk events. And, we're not, many of the clients that are talking to us about emerging markets, they're beginning to move these allocations in, looking longer term, looking to capture longer term trends. But I think everyone is largely waiting to see where the election settles out. Not so much who's in office,
Right.
but what the policies are.
All right, what are we doing with our money in the equity markets? Are we still running from international? I mean, I got dollar strength today, killing international, 104 DXY, yen out to 153, euro breaks 108, weaker euro 107. I mean, George, is it still dominant dollar, avoid international?
Well, I think you have to think about diversification, not having some non-US exposure, having some international, having some emerging markets, select emerging markets really gets you a lot of diversification. Again, don't forget, you need a portfolio, you need to protect, you want to participate on the upside, you want to protect on the downside. And the best way to do that is still to have a diversified portfolio. So you need to get into assets that get you the lowest correlation.
George, thank you so much. George Patterson there dropping pianos off buildings and physics with PGIM and quantitative. Just really acute work there by Mr. Patterson. We got to go back here and revisit the Dow. I'm going to say, Paul, futures have moved to a market opening worse than futures. Dow, negative 0.6%, down 263 points. SPX not nearly as bad, down 0.3%. And the VIX, somewhat stable, 18.63. What do you see?
Just looking at you're talking about the Dow, Tom, down 264 points. 127 of those points are due to McDonald's, the pull-off today. And I was just thinking about, McDonald's is a story that if you like the story, if you fundamentally like the story for whatever reason, you love days like today. You love days like today because then you can step in and buy some stock at a much lower valuation. But again, if you have any, short-term, performance issues, you need to be trading around this thing. But again, I think a lot of these long-term investors look at it. The McDonald's story is what it is, and if you like it, I don't think anything's materially changed long term.
I said to Lisa once, I said, let's go to lunch, and she said, okay. So we're walking down 3rd Avenue, and she figured out we were going to Shea McDonald's.
Yeah,
and,
that wasn't what she was looking for.
Just in the traffic, walking the sidewalk, all of a sudden Lisa disappeared. She was just gone. Yeah. When was the last time, Lisa, you were at a McDonald's?
Oh,
Nixon?
gosh, no, it's been a very long time.
Nixon was
Sometimes you would
president.
go because you're on the rush with kids and you just go to the drive-through.
No.
But I haven't done that.
I think her kids sneak out of the house and they don't
I
do
do,
anything
dude.
crazy. They go to McDonald's.
No, they DoorDash McDonald's.
Oh.
That's what gets me upset.
Yes, I'm
I
with you.
cannot
We
stand
haven't.
that.
Yeah, we put
There's a
a
McDonald's
moratorium on that.
in our town, and
Yes.
they still DoorDash it.
And they DoorDash it, and there's that little, whatever it's called, home fry thing, potato thing.
Yes, the hash brown.
The hash brown,
Oh.
left over for me. You know.
That's it.
They're generous. It's the way it is. Dow, negative 271. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Are North Korean troops in Russia now? Defense Secretary Lloyd Austin confirmed it. Austin is saying, while they don't know why the troops are there, it could reveal Russian President Putin's concerns inside the front lines.
This is an indication that he may be even in more trouble than most people realize.
There have been growing fears that North Korea's leader Kim Jong-un will assist Putin by sending soldiers to the battlefield in Ukraine. McDonald's faces a deadly E. coli outbreak, as we've been talking about all morning. One person is dead, dozens of others sick, including at least 10 hospitalized with a bacteria that may be tied to the onions in its quarter-pounder cheeseburgers. Michael Halen covers McDonald's for Bloomberg Intelligence.
They're going to be in the penalty box for a while. It was a tragedy. Obviously, there's going to be a ton of bad press around it. The most recent one we can look to was Chipotle. Their same-store sales dropped for 5 straight quarters. They dropped 20% in 2017. I don't think this will be as bad.
Michael Halen with Bloomberg Intelligence notes, though, that Chipotle's ingredients are behind sneeze guards near the customers, while McDonald's prepares its food in closed kitchens. Finally, he created Fernando Mania in the 1980s, winning Rookie of the Year and the National League Cy Young Award in 1981. Mexican-born pitching sensation Fernando Valenzuela has died. Los Angeles Times baseball columnist Bill Shaken on how Valenzuela changed the fans' outlook in L.A.
It wasn't even supposed to be in the game. He started opening day in 1981 as a replacement for somebody else who couldn't make it that day. He threw a shutout. He kept throwing shutouts as if it was easy. Nobody else did that.
Fernando Valenzuela was 63. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
And he could hit. What was great, he batted 250. Major League batted 250. And people go, well, now that's like you're paying your third baseman umpteen gazillion a year if they bat 250. But back then, it's a lower average. But that was like he pinch hit. Lasorda would send him out there, hit the ball.
And what was sad back then, obviously, you didn't have, where you can get all the games all over the nation and this and that here and there.
Right.
You had to depend on watching the sportscast at the end of the news to find out what the heck happened. And,
Right.
ESPN was still just getting off the ground.
And I had to explain to the offspring last night, there was a guy named Roberto Clemente who was a giant of the game. And what the new, I can't believe I'm saying this. Lenny Dykstra, if you're listening, I'm sorry. The ball's never come down. The fact is the Mets invented the process of Latin baseball.
Yeah.
Fernando was before that. It wasn't a machine when this kid from Mexico showed up.
Yeah, and well, you mentioned Roberto Clemente. I was a big fan of him.
Yeah.
And I was really hurt, when he passed on in the plane crash. But Fernando Valenzuela is 63, and we're still trying to figure out what he died from. I know that there was some illness that he was going through, but we really still don't know what happened.
Well, we'll have to see. Great coverage there by Michael Barr. Look for that on Bloomberg Business and Sports as well with Scarlett Fu. Who's the other one? Bloomberg Business.
Some Knicks fan.
Yes.
It's a Knicks fan. Knicks lost to the Celtics. We'll talk about that tomorrow. Dow nearing negative 300, negative 293 on the Dow. We're looking at McDonald's. We're looking at Boeing. From New York City, Bloomberg Surveillance. We're on YouTube. Subscribe.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have stocks lower, traders sifting through a ton of company earnings. Right now we have the NASDAQ down 0.5%, the Dow down 0.6%. We have the S&P 500 down 0.3%. The 2-year yield at 4.05%. That's up 1 basis point. The yield on the 10-year 4.24%, and that's up 2 basis points. We have Brent crude $75 a barrel, WTI crude $71 a barrel. We have spot gold at $2,737 an ounce. Shares of McDonald's down 6% after that E. coli outbreak we've been hearing about all morning, tied to its quarter pounders. In fact, when you take a look at the 11 major industry groups in that IMAP feature of your terminal, the biggest drag coming from restaurants. You'll click through, you see McDonald's coming out on top. That's followed by Chipotle down more than 1.5% and Starbucks down nearly 1%. Have to check in with the shares of Spirit Airlines. They're up 28%. The Wall Street Journal reporting it's reviving merger talks with Frontier Airlines. And finally, we've been hearing so much about AI. Well, now this Polish radio station stirring up some controversy after letting go its journalists, relaunching with AI-generated presenters. Interesting. That is a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Just shout out to our team, the interns and Eric, just driving it here. I mean, Eric can slide into a nap here. They're killing it on fixed income today. Mm-hmm. I mean, it's just been an incredibly strong day. Bob Dahl on equity markets earlier, and Gina Martin Adams stepped aside for the McDonald story. We'll get to Gina Martin Adams here in the coming days and hours. We finished strong with Jamie Patton out of Princeton in computer science with TCW and just a bulletproof research note that goes against consensus. Jamie, thank you so much for joining Bloomberg Surveillance across this nation. What does the yield right now signal? Where's my eyes are killing me, Paul. 4.24%. Yeah. What does that 10-year signal to Jamie Patton?
It signals to us that the market has misunderstood what a Trump presidency means. So over the past month, we've seen this pretty substantial rise in rates, and that has coincided with prediction markets increasingly pricing in a Trump presidency and potentially a red sweep. We think that this view from the market is being informed by the 2016 experience, but we know it is not 2016. The Cubs won the World Series in 2016, and I don't think anyone's mentioned them for 8 years. I'm as surprised as you are that I just made a sports reference, but I heard you guys talking about Dodgers, Yankees, so it's top of mind. Maybe more on brand for me would have been to say something like Michael Barr is talking about Diddy, not OJ. But anyway, back to rates. It's not an appropriate comparison. In 2016, we were on the eve of a hiking cycle, and the big move in rates was led by the front end and a huge repricing in Fed expectations. If we had that same repricing in Fed expectations today, it means that the Fed is done cutting rates and won't cut rates again for a year and a half. It's just not an appropriate comparison. Also, this popular belief that Trump and tariffs will be inflationary, it's probably true that tariffs are inflationary, but they also hurt growth. So inflation pushes rates up, lower growth and hurting the consumer pushes rates down. It just doesn't make sense to us that a Trump presidency should mean rates are 50 basis points higher. And the deficit, it's going to be higher either way. The mix of taxes and spending will be different in a red versus a blue government, but both scenarios have deficit increasing.
Probably, Jamie, so there's some out of consensus views there. Another one you guys hold, I think it's a little out of consensus, is that you think the Fed will keep policy rates too high for too long. Why do you think that?
Well, we think they're too high right now. So, for example, on Monday, Lori Logan said inflation and employment are both within striking distance of the FOMC's goals. Goolsby on Bloomberg Odd Lots podcast said something like, if we could just freeze labor markets and inflation right here. So if you came in from outer space and you didn't know anything about what was going on, and you heard these Fed speakers saying everything is perfect right now, would you then put policy rates over 200 basis points into restrictive territory? No, you'd probably put them wherever neutral is. No one knows, but probably somewhere around 2 7/8, which is at least the Fed's forecast of neutral.
So what's a bond shop like TCW? What are you guys doing given all that kind of macro background?
So we think that there's tremendous risk reward in being long duration, especially in the front end of the yield curve. And by that, I mean the 2 to 5 year sector, which is most sensitive to Fed policy rates. We think that the Fed is going to have to cut rates more and faster than what's currently priced into the market. Currently, the market has Fed policy rates getting down to the mid 3s in about middle of 2026. That means that the Fed has raised rates over 500 basis points, kept them there for 3 years, and then comes back down, but doesn't even get to neutral. Their own definition of neutral is 2 7/8.
What does your TCW call do to stocks?
Oh, stocks are priced for perfection, and credit spreads too. Risk assets are priced as if the Fed has already nailed it. And that's hard for us to believe. If just taking out any PhD economist, any of that stuff, just saying the Fed raised rates over 500 basis points, keeps them there for multiple years, and there's absolutely no fallout. It's like saying the economy is no longer leveraged. Rates don't matter.
So what does a 10-year real rate do? I mean, I've thought about the real rate, Paul, in like 8 days. That's like a first this year. Jamie, what does the 10-year real do? I mean, I'm back up right now to a 1.91. What a backup. Are we going to pop over 2% there and stay there?
We could see some short-term volatility between now and the election. We expect volatility to remain very elevated. So short-term gyrations are you're probably going to see sharp moves in either direction. But over the long term, we think that we'll see a much lower yield. So 10-year nominal rates probably in the mid-2s. Even the low to mid-3s would be a pretty big rally.
Paul, that's a wow statistic.
That is a wow statistic. So, hey, Jamie, during this election, there is some talk, not a lot of talk about the deficits and fiscal sustainability and all that kind of stuff. But a lot of people say, we got to talk more about this. This stuff is really, really a risk, all these deficits in the national debt. I mean, someone who traffics in the treasury market, do you see any angst in that market about our fiscal sustainability?
We see angst in every market other than treasuries about fiscal sustainability. Investors in every asset class are asking us. They all seem very concerned. We are not concerned. The U.S. has exorbitant privilege as the world's reserve currency, and treasuries are a de facto safe asset. There are always limits to the amount of debt that a market can handle, but the U.S. data suggests to us that those limits are much higher than people think. The important thing about this is that the status of the U.S. as the world's currency, it's really not at risk. I mean, the question would be, well, who or what would replace it? I personally can't think of anything. So if not today, when does this debt load become a big problem? That's the $2 trillion question. But today's trade, so historically, I should say, the amount of treasury issuance and the size of the deficit is totally uncorrelated to the level of rates. What is correlated to that is term premium. And by that, I mean, you need to get paid more money to take more risk. So the yield curve should be steeper. And that's another reason why our long duration position is concentrated in the front end of the yield curve.
I got 42 seconds in honor of Jackie. Jamie, we didn't have you on for this bond talk. I mean, Tom Soto. He's on the Dodgers Foundation, committed to TCW. I mean, how good are your tickets for Game 1?
I have no idea. You're the wrong person. I can't believe I said anything about baseball. That was a mistake. I'll ask the guys.
If Mr. Soto calls, you say, yes, sir, I'd love to attend. The Dodgers are in the blue or blue. I mean, the blues are different, Paul. Dodger blue, Yankees blue.
Yeah, absolutely. Yeah.
Jamie, thank you. Jamie Patton with us with TCW, Trust Company of the West. You got to get that in.
Yeah, exactly.
Do we have time to go to our congestion reporter?
Sure, always.
No,
always.
Actually, we don't. We're running up against the clock.
Oh, are we? Where are we in the election year in congestion? Is it a topic?
As far as I know, it's, dead and gone. But
dead and gone until Wednesday, November
until we
6th.
tell you otherwise. But, the infrastructure's there.
It's there. All the cameras are up all over Manhattan, just sitting there.
Sitting there.
I came out of the tunnel, boom, it looks like Star Wars.
Yep.
Like 8
Yeah, it
cameras.
is crazy.
There. John Tucker, thank you so much for that election update. In honor of Fernando, music of 1981, a phenom out of Nashville, Juice Newton.
You're just a heartache in disguise. You
Won't you keep my heart from breaking if it's only for a very short time?